complexity has not, and it requires a great deep of attention and further study and in-depth decoding, which is the need of the hour. As an insolvency professional, if most of the participants are insolvency professional, we often face these several issues while doing our assignment, where we get stuck on some issues or the other, and each assignment has its complexities. I'm sure this conclave will help each of us in getting more clarity on the general general topic that has been carefully chosen by us. And thanks to Sumitji for routing in these speakers from all over India. And experts from the respective field would be deliberating on the various topics. In today's session, friends, we have with us CS Vinod Kothari as our first speaker, who will be deliberating and talking on the distribution between the workmen due, including as we know that there has been many litigation relating to the PF, ESI, or their priority in payment to the secured financial creditor and their distribution vis-a-vis secured financial creditor. So we will be discussing this issue in detail with our expert CS Vinod Kothari ji. Second topic for today's session, will have a speaker IP Vinit Chaudhary ji, who's also a renowned insolvency professional, who will be deliberating on the different compliances which is required during the CRP process. As the insolvency professional, we are all aware that we need to comply with all laws of the land during the CRP process, even though the corporate debtor was complying with the none. So especially this session will be taken by the Vinit Chaudhary ji, who will deal with what are the compliances under Companies Act and under the SEBI law specifically. Lastly, for today's session, we'll have CA Haras Karodia, who will be taking us through the implication, although this is also a sort of compliances which needs to be done during the CRP period, implication of the indirect tax on the CRP and the liquidation process, whether the GST is at all applicable and how do we deal with it. I mean, hopefully we will be more enlightened after this session. So with this, friends, again, I welcome you to this conclave. And now I would like to hand over to Shivang for introducing our guest speaker so that we can start with the session for which we are long looking into. Over to you, Shivang. Thank you.
Thank you, sir. Good evening to all participants and good evening to Sir Mr. Kothari. So I take this privilege to introduce our first speaker. Shri Vinod Kothari is a fellow member of the Institute of Company Secretaries of India and an associate member of Institute of Chartered Accountants of India. With an experience of over 30 years in the field of corporate law advisory, Mr. Kothari was one of the first IP professionals in India. Mr. Kothari is the author of several books, including one of the first books on the Insolvency and Bankruptcy Code, titled Law Relating to Insolvency and Bankruptcy Code 2016. Appointed as the insolvency professional in several matters, he has been widely renowned for consultancy under IBC also, and accredited regular lecturer at ICSI, ICAI, ICMI, and other professional forums. Mr. Kothari conducted seminars in over 25 jurisdictions all over the world. We are privileged to have you, sir, with us. I request you to please begin your deliberation.
Thank you very much, Mr. Shivank, and thanks Jitendra ji, Vivek ji. Sumit ji is looking so very serious as insolvency professionals should be looking. Probably is serious because of the points that Jitendra Loya ji mentioned during his introduction. He said the next topic will be talking about compliance burden on insolvency professionals. And Jitendra ji was also mentioning that the corporate debtor may not have done any compliances during the life of the corporate debtor, but as insolvency begins, you start complying with all the compliances necessary. And the good thing is that if you fail to do the compliances, then what happens? If you fail to do the compliances,
Liability is on you.
I'm wondering, it's almost like saying if a director of a company, I mean, the company faces a penalty, the liability of the penalty will be personal liability of the director. ऐसा कौन सी दुनिया की कौन सी कंपनी में कौन सा डायरेक्टर है जिसने कंपनी की लाइबिलिटी अपने सर पे ले ली है? We talk about principle of limited liability. यहाँ we talking about unlimited liability of a insolvency professional who is one person substitute for all. The entire directors have gone away. The entire liquidation even was sold. The manpower has also gone away. You are the only one left, and you are there to take the brickbats and all the kinds of complaints and litigation. At the same time, now IBBS says you should also be ready to bear the burden of all the penalties. I'm wondering if this is what is known at the time of taking an assignment. I don't know whether any professional would ever, agree to take an engagement on the understanding that liabilities, which might run in crores. Penalties, for all you understand, might be, for example, filing a tax return where you claimed a deduction. The tax officer says, I'll disallow the deduction and imposes a penalty. And that penalty might run in few crores, probably several times of the fees that you would make through your career as an insolvency professional. I'm wondering, what is it that we think in terms of exposing all these liabilities on the insolvency? I don't know whether it was actually well considered move of the IBBI, but I mentioned to Sumitji also that if this is a forum of insolvency professionals, which I do understand it is, it's a very serious issue, and therefore we need to take it up. But that's not the topic for my discussion today. My discussion is on a different topic, which is the priorities between secured creditors and workmen. And I also very often say that the heart of insolvency, after all, lies in priorities. Insolvency or bankruptcy, more so in case of bankruptcy, but equally as much in case of insolvency, is obviously a case of deficit. The assets have fallen short of the liabilities, so we're talking about a deficit. Wherever we have a deficit, it's a question of prioritization. Again, I'm repeating an example which I give very often कि आपने घर में 10 मेहमान को बुलाया, 10 को बुलाया, 20 आ गए, और आपकी somehow आपके यहाँ खाना है 6 आदमी का, 20 खाने वाले हैं और 6 आदमी का खाना है, तो आप क्या करेंगे? आप प्रायोरिटीज करेंगे, बच्चों को पहले खिला देते हैं, बच्चों को भरपेट खा लेते हैं, बच्चों को खिला दिए, अब उसके बाद कोई लेट्स से बूढ़े हैं, अनेबल है, वेल दे विल प्रोबब्ली हैव टू बी फेड फर्स्ट, बाकी लोग ठीक है बर्दाश्त कर लेंगे, बाकी लोग सो टू से टेक ए हेयर कट. Same is situation with the insolvency process also. We're talking about a deep deficit. How deep the deficit is would depend on the depth of the insolvency. But since currently what we're getting in insolvency in the country are companies which have been long moribund. They've been sort of dead for years, and they are now just being exposed to insolvency. They were insolvent for years in the past. And therefore, these are cases of very deep insolvency. So, itni deep insolvency mein the question of running through the waterfall, the question of even running through category number 3 or category number 4 will probably never come. Therefore, we may not have to refer to the entire waterfall ever, but because we're talking about a deep shortfall, so question of appropriate allocation between the workman dues and secured creditors, and then inter se among the secured creditors will always be of utmost significance, which is why whoever is hosting this, can you please allow me to share my screen? Give me screen sharing rights, or make me the co-host, whatever might be convenient. So the question of done.
Yeah, I'll do it.
So the question of priorities always remains very significant, and that's the because thanks, it's now been done, because it's so very significant. Therefore, that appropriately forms the first topic for this today event, the question of priorities. So I'll be talking about very importantly the priorities between workmen's dues and secured creditors. What exactly is the meaning of a secured creditor? What is the meaning of workmen dues? Because that's another very important area on which jurisprudence has developed or is developing over time. and then inter se priorities between secured creditors. Various secured creditors, are they all necessarily pari passu, or between them also there are question of priorities? So these are very complicated questions. And I'm sure you'll all appreciate that these questions are as significant as they are unresolved questions. Significant and unresolved both. So that becomes actually ironic. A question which is so very significant, if we do not have a clear law on this question, we are then expecting jurisprudence to develop over these questions. 6 years after the advent of insolvency law, if we find even the Supreme Court's versions are changing over time, it would probably take years for the jurisprudence to get settled. It would probably be 10 years by the time there are some established Supreme Court rulings which have laid the rules clearly. तो वो 10 साल के इंसॉल्वेंसी प्रोफेशन बैठा रहेगा. आपको चूंकि क्वेश्चंस आर अनरिजोल्व्ड, आप तो इस बीच में डिस्ट्रीब्यूशन कर दे रहे हैं. हो सकता है आपने डिस्ट्रीब्यूट कर दिया, हो सकता है आपने रॉन्ग प्रायोरिटी फॉलो कर लिया, हो सकता है आपने ज्यादा डिस्ट्रीब्यूट कर दिया, अंडर डिस्ट्रीब्यूट कर दिया. Either case you're doing a damage. So what the point I'm making is that if there are significant questions which are best addressed by lawmaking, waiting for the judiciary to settle jurisprudence on these questions is not the best way to run a profession. To my mind, these are questions on which lawmaking has to be clear. अब लॉ मेकिंग के लिए पार्लियामेंट में कितनी बार तो चले गए ऑलरेडी, और इस बार लगता है मॉनसून सेशन में फिर एक इंसॉल्वेंसी अमेंडमेंट आएगा. तो अगर ये अमेंडमेंट आ ही रहे हैं बार, हर 3-4 महीने में एक बार अमेंड कर ही रहे हैं लॉ को, तो ये प्रायोरिटीज का क्वेश्चन वंस फॉर ऑल हैज टू बी एड्रेस्ड बाय द लॉ. Otherwise, it becomes very difficult, as you would just see that on the inter se priorities between secured creditors, there are conflicting rulings of NCLAT, and the rulings of Supreme Court also have so far not addressed the question properly. Same way also the question of shortfall in contributions to things like gratuity fund, provident fund, etc. These questions are still lying unresolved. So I'll flag a few questions. I think the objective of today's event possibly is to invoke some discussion among the participants here. Very articulate professionals are participating today. I'm told that the participants are from all over the country, and it would be very interesting to have discussion with all of you. So I'll maybe speak for another 20, 25, 30 minutes maximum, and then would look forward to interact with you. So I did say need for prioritization is obviously because you're talking about a deficit. That very clearly explains wherever there's a question of deficit, there's a question of prioritization. डेफिसिट ऑफ टाइम, आपके पास टाइम कम है, आपके पास 10 काम है, आपके पास 2 घंटे टाइम है, प्रायोरिटाइज करना पड़ेगा. हम लोग अपने ऑफिस में क्या बोलते हैं, काम को प्रायोरिटाइज करो, जो जरूरी है पहले करो. तो ये प्रायोरिटीज का क्वेश्चन सब जगह वहां पर आता है जहां हमारे पास रिसोर्सेज एंड एस्पिरेशंस के बीच में कॉन्फ्लिक्ट है. रिसोर्सेज आर लिमिटेड, aspirations are much higher, we talk about prioritization. Similarly, in insolvency, the liabilities are much more, assets are limited, hence the question of prioritization. So question of priorities, and then the waterfall, and the position with respect to secured creditors, and that too has to be tested, from point of view of general rules about security interest. क्योंकि secured creditor वही है जो as per law secured है. Insolvency law is not about creation of security interest. Insolvency law is about addressing the claims of secured creditors. Security interest is not created under insolvency law. Security interest is claimed or admitted under insolvency law, but the creation and perfection of security interest has to be as per general law of security interest. So we need to understand the general law also, and then we need to understand the inter se right of secured creditors. That's the point on which I was saying earlier that courts have given extremely diabolical, to an extent diabolical rulings. We need to understand that, and the dues of workmen versus the dues of secured creditors, we need to understand that as well. So I was mentioning that quite often when we talk about section 53, it's mostly felt that section 53 is relevant under liquidation. जब तक liquidation नहीं है तब तक section 53 का relevance नहीं है. This is a wrong view, because priorities under section 53 are relevant during insolvency also. Because during insolvency as well, the resolution plan has to take into consideration the priorities laid in section 53. Section 30 makes a clear reference to section 53 to say that the liquidation value of assets, and liquidation value has to be defined with reference to section 53 only. That would mean during insolvency, we still have to refer to what the liquidation value would be. how much would a particular secured creditor get if the entity was to get into liquidation? Because no financial creditor during insolvency can be paid lower than what he would be getting, unless, I mean, there's a deep deficit for everyone. No one can be expected to be paid lower than what he would be paid if the entity was to get into liquidation. That's the very important canonical principle of insolvency law, that resolution for no creditor can be worse than liquidation. Liquidation is the ultimate. लिक्विडेशन से बुरा कुछ हो नहीं सकता. लिक्विडेशन मौत के बराबर है. जैसे लाइफ में मौत के बराबर कुछ नहीं हो सकता, लिक्विडेशन मौत के बराबर है, तो लिक्विडेशन से बुरा कुछ हो ही नहीं सकता. तो insolvency can never be worse than liquidation. That's the basic principle on which liquidation value concept builds up, and therefore the question of priorities in liquidation is relevant during insolvency as well. Of course, is relevant in liquidation process. In voluntary liquidation, as such, we don't have a question of deficit, because assets are, we're talking about a solvent company which is given a solvency certificate. We're not talking about insolvency there, but there also explicit reference by section 59 includes reference to section 53 as well. So actually priorities are relevant there as well. So priorities are relevant everywhere. This is by and large a settled question, barring some rulings of Supreme Court, which I mean, for example, Amit Metallic's ruling, to some extent, it's gone against the principle of liquidation value, but I'll avert to that a little from here. Now, I'm mentioning a principle called horizontal versus vertical equity. Horizontal equity versus vertical equity. Horizontal equity means what? Creditors of the same ranking, creditors having same ranking cannot be treated differently. That would mean if there are 3 creditors who are pari passu among themselves, one cannot be paid. Somebody's audio is, maybe the host has to mute. Okay. So if there are 3 creditors having pari passu rights, they cannot be paid differently, but that would be breaching the principle of horizontal equity. यहाँ पे commercial wisdom का केस नहीं है. Time and again, we find from ruling commercial wisdom of the COC will have uppermost right. यहाँ commercial wisdom का कहाँ सवाल है? किसी भी COC की commercial wisdom, how can it undo my contractual rights? Contractually, I was supposed to be at par. How can I be less than par? Because I never signed a contract which permitted me to be pushed to a position less than par. In US insolvency law, this principle is called a cram down principle. Cram down principle basically means what? That through majority vote, the majority creditors can cram down a minority creditor. But India may be still, and I think that's a principle of international, insolvency laws. It's a uncitral principle as well, that while writing insolvency laws, the contract was always given uppermost priority. Insolvency law can never tread over contractual rights. So contractually, I was at par. I cannot be made less than par because of COC's wisdom. So that's what is called horizontal equity. Then comes the question of vertical equity, that if this entity was to be pushed into liquidation, how much value will I get? You've probably seen the ruling of Amit Metallic's. There is a point, and that's a very significant point. I'll just come to that a little later. That if this entity was to get into liquidation, let's say I prove that the value of my asset is say 10 crores. I have a right. I have a sole right. I'm the sole secured creditor on a particular asset. My rights are not pari passu. I have the sole security interest on a particular asset, and that asset is worth rupees 10 crores. Now the COC somehow decides to pay me 2 crores. Will I still have to agree? Because there comes the principle that no creditor who is dissenting financial creditor can be promised or paid less than the liquidation value, because that breaches the vertical equity during resolution, which is actually that if the entity was to go into liquidation, what is the minimum value will I get? No one can be paid less than that value. All I need to do is to dissent from the resolution plan, and I have then to be offered at least the liquidation value. So this is the horizontal versus vertical rule in UK insolvency law, based on which our laws are largely impressed, largely drawn. This principle is not as such a part of statutory principle, but over the years, the courts have laid down this so-called horizontal versus vertical equity. There are several rulings which have talked about it. And all rulings basically say that no resolution plan can do something which is breaching the principle of fair and equitable treatment. Fair and equitable. Nowhere does the law talk about equal treatment. Equitable and equal is not the same thing. Equitable. Law is not saying it should be equal. Equitable. That would mean everyone has to be paid according to mutual rights, and no resolution plan can ever be unfairly prejudice the claims of any particular creditor. For example, a secured creditor cannot be treated as unsecured. Unsecured creditor cannot be taken as secured. A senior secured creditor cannot be pushed to the priority of to the position of a junior creditor. So, if the rights are well defined by contract, those rights cannot be breached by the so-called wisdom of the COC. So the point that I was just mentioning, that a ruling of Supreme Court in the case of Amit Metallics goes to establish what I say equal as opposed to equitable treatment. We don't need to get into facts of the case, but the facts by and large seem to suggest that a particular secured creditor had a value of asset, asset securing it was say rupees 12 crores or so. The resolution plan offered 2 crores only, and the creditor obviously went into appeal saying, I don't accept the plan is not fair, not equitable. Right up to Supreme Court, the COC's commercial wisdom sort of had its play. And eventually the Supreme Court said that you are forced to accept rupees 2 crores if the COC has agreed to pay you that much. This is what is breaching the principle of equitable treatment and establishing equal as opposed to equitable rights. So in a sense, the treatment, but as I said, the jurisprudence on this question is still evolving. We'll probably see some of the rulings of Supreme Court coming on this issue in time to come. But let's anyway continue to examine the mutual priorities. Now, what I'm stating as of now is something that all of you understand, the waterfall order under section 53(1). And as you all understand, we're talking about 6 ladders of priorities. On screen, you can actually see 8, but the last 2 are not relevant in insolvency, at least because there's no question of any payment to either a preferential creditor or equity shareholder during insolvency. Insolvency may capital ka payment ka sawal hi nahi uthega because you're talking about a deficit. So assets are not sufficient even to pay the creditors, which is why the insolvency has been initiated. So no question of the last 2, basically talking about first 6. And I'm sure all of you would agree that 6 तक तो पहुंचने का सवाल ही नहीं उठता, हम 2 तक आते आते सब मामला खत्म हो जाता है. कुछ केस में तो लोग बोलते हैं कि कैटेगरी नंबर 1 को पे करने का पैसा नहीं होता. इंसॉल्वेंसी रेजोल्यूशन कॉस्ट और लिक्विडेशन कॉस्ट को देते ही पैसा खत्म, तो इवन सिक्योर्ड क्रेडिटर तक जाने का सवाल नहीं उठता. कई केस में ऐसे सुनने आया कि भी रेजोल्यूशन प्रोफेशनल का पैसा भी नहीं निकल रहा, वाटरफॉल, वो टंकी में वाटर ही नहीं है, कहां से वाटरफॉल आएगा, ऐसे क्वेश्चन भी सुनने को आए हैं. बट एनीवेज, लेट्स अज्यूम दैट at least the water is sufficient to pay number one is the resolution process cost, which of course includes your own fees as an IRP or as a liquidator. And then comes item number 2. My focus today will be on item number 2. I'll of course have something to talk about item number 1, but more importantly on item number 2, that's my topic today. Item number 3 is employees dues. The principles of employee dues are by and large similar to those of workmen's dues. Now, we don't need to run through this and the next slide, because all I'm trying to say is that we made a huge change in India, and the government agreed to a huge compromise. I don't know whether the government or the government departments actually understood what they're doing, but they did a lot of compromise. The compromise basically is what, that in Companies Act 56, as also in Companies Act 2013, all the time government dues were here. You can see government dues are here. In 56 also they were here. Government dues were at the top of the waterfall. Cost dene ke baad, of course, payment to workers and secured creditors was always number 1. This was always number 1. This is only in case of those creditors who have relinquished security interest. This was always item number 1. But uske baad always it was government dues. So income tax dues, GST dues, municipality dues, whatever taxes, whatever government dues were always the top item in the waterfall. The government did a huge compromise and they said, हमको आप भले ही यहाँ लाके दो, number 5 में. नंबर 5 में मोस्टली पहुंचता ही नहीं है, तो गवर्नमेंट ड्यूज आर बेसिकली हेडिंग फॉर राइट ऑफ। इनफैक्ट हर केस में राइट ऑफ ही है। अब गवर्नमेंट को बर्दाश्त नहीं होता तो कोई केस में टैक्स ऑफिसर एसेट को सीज करता है, कोई केस में डिमांड नोटिस भेजता है, कोई केस में आईआरपी नोटिस ठोकता है, किसी केस में पेनल्टी लगाता है, एटसेट्रा एटसेट्रा। ये जो है अभी समझने में बहुत टाइम लग रहा है टैक्स ऑफिसर्स को कि टैक्सेस आर पेबल ओनली एज ए क्लेम ऑन द लिक्विडेशन एस्टेट और द resolution cost, and taxes cannot be paid except in terms of priorities of section 53. आप देखेंगे तो other countries also still government dues are not like item number 5 in other countries as well, because the dues to the state are high items in waterfall in other countries as well. BLRC report talked about it and they said the government is willing to do a compromise for reviving the economy. Economy revive हो के नहीं हो, but insolvency जरूर जम के चल रहा है. Government dues have suffered. I think the worst sufferer in the insolvency process is the government. I'm not sure if I'm making a very irresponsible statement, but I would say the biggest stakeholder who suffered the most in insolvency process is the government itself. Government dues का जितना नुकसान हुआ किसी का नुकसान नहीं हुआ. Anyways, so philosophical points don't have much of relevance in this meeting. So I'll straight come to what exactly liquidation estate से आपको pay करना है, और liquidation estate में what is included, what is not included. So what is included, all of us understand all the assets of the corporate debtor. Assets meaning tangible, intangible, incorporeal, contractual, all assets of the corporate debtor become a part of liquidation estate. What is excluded is money held in trust. Money held in trust meaning what? Something of which the company is merely a trustee. You are simply a fiduciary. The money is not yours. You are simply a fiduciary, or you are simply a bailee. You are simply the assets don't belong to you. You are simply holding possession of the assets. Those are the assets which are excluded. In case of subsidiary companies, the assets of the subsidiaries are also excluded. The shares of the subsidiaries are a part of liquidation estate, but as such, we do not breach the so-called veil of incorporation. We are not lifting or piercing the veil of incorporation. And therefore, the assets of subsidiaries or the assets of associates, we cannot directly touch the assets of subsidiaries or those of associates. We can only sell the shares that we own. Ownership of shares you can pass on, but you cannot pass on the properties of the subsidiary itself, which is possible only in the scenario of group insolvency. Group insolvency, as I'm sure all of you understand, is more like a fictional. It's a fiction. It's not a real reality, because it's just a proposal. Once in a while, in some stray cases, group insolvency is ordered, but mostly by way of consensus of the creditors. For example, Videocon, for example, in future retail, probably it might be tried, but more like a consensual matter than creditors forcing the company to get into group insolvency. Now, the unresolved questions, however, relate to gratuity funds, pension funds, employee benefit funds, and so on. Provident funds, pension funds, gratuity funds, all these funds. If there is an amount lying in the fund, there is a fund and the amounts are lying in the fund, for sure the funds do not form part of liquidation estate. So anything which is lying in the fund is definitely the amount which is outside of liquidation estate, and therefore the trustees of the fund will be entitled to pay to whoever the claimants are. The liquidator does not even, the arms of the liquidator do not extend to the amount lying in the funds. Question, however, is that if there is a deficit, the company has not done contribute. The company has failed to make the contributions to the funds. Deficit of contributions to be made by the company. Say gratuity fund. The company ought to have contributed to the fund, but the company has not contributed. Now, I'm sure all of you appreciate that when it comes to gratuity, a company may choose various approaches. A company may not constitute a gratuity fund at all, and the company may continue to pay gratuity as and when employees retire or superannuate, or in case of death, let's say on death. The company may pay as and when the gratuity event occurs, but that would lead to sort of choppy, cash flows of the company, because gratuity liability can be substantial, and it is a quite choppy, impact on cash flows is uneven, irregular, and therefore companies smoothen the liability by going for actuarial valuation, and they make contribution to a gratuity fund to sort of smoothen or even out the cash flows. So they constitute a gratuity fund to which they contribute money regularly, and thereafter, as and when the gratuity event comes, the trustees settle the money. Supposing the company has not contributed, so this failure to contribute to the fund, will that also be out of liquidation estate, and therefore one would say that this money also does not belong to the company, and therefore does not form part of liquidation estate. On this issue, the jurisprudence is to an extent once again diabolical. So far, everyone was by and large going through the rulings of Mojar Bear, which is here, and the ruling of Savan Godiwala, which is here. But you would now find yet another ruling. First of all, the ruling of Mojar Bear, I'm told, is up in appeal before the Supreme Court. That's pending an appeal, and therefore it might be that this ruling might either get overturned or might get affirmed. But yet another ruling in Sunil Kumar Jain versus Sundaresh Bhatt, which is quite a recent ruling, it seems to suggest that the liability of gratuity will be paid out of the fund. Supreme Court's, the verdict is not exactly on this question, the verdict on a different question, but seems to suggest that the liabilities in that case, the liability of PF, liability of gratuity fund, or liability of superannuation fund, etc., will be paid from out of the fund. That would mean what? If there is money in the fund will pay it. If there's no money in the fund, it's a question of shortfall. It will be paid from out of the fund and not from assets of the company. That seems to be the, though not very clearly, but that seems to be the implication from the Supreme Court ruling in Sunil Kumar Jain versus Sundaresh Bhatt, fairly recent ruling. Personally, if you ask me, I think the law is quite clear on this, that if there was a fund, the money has been set aside and become a part of the fund, the money is gone, and therefore the money is not a part of liquidation estate. If there is no fund or there is a shortfall, then we're talking about a claim on the company. And if it's a claim on the company, the claim is equivalent to a workman claim. In fact, contribution to gratuity fund, etc., is defined as a part of workman's dues in the Companies Act relevant provisions as well. And therefore, my personal view is that if the company has failed to contribute to gratuity fund, provident fund, pension fund, etc., then this is equivalent to the company's obligation to pay, which is at par with the rest of the wages or salaries. And therefore, you cannot put it on a different delta, because if you say that this money does not form part of liquidation estate, that would mean this money has to be paid out of liquidation estate. That would mean ignoring all priorities, the money has to go first, as if it was not a part of liquidation estate at all. But if you say that it's a part of employees' dues or workmen's dues, then it's settled in terms of the priorities of section 53(1)(b). Now, I would say that the position of employees' contribution to provident fund, which is deducted from the salary of the employee and not paid to the relevant fund. Employer ने deduct कर लिया लेकिन fund को pay नहीं किया. पैसा मेरा नहीं है, पैसा कंपनी का नहीं है, पैसा employee का था. कंपनी ने काटा और काट के फंड को देना था लेकिन नहीं दिया. वहां पे situation becomes difficult because there you are clearly a trustee. So trust assets don't form part of liquidation estate. You are a fiduciary only. It was not your money. You are simply deducting and paying to the relevant fund. There you cannot say that it is still a part of it's a part of obligations of the company because you are actually a fiduciary. So other than employees' contribution to either of the funds deducted from the salaries and not paid, to my mind, the rest of the obligations of the company stand on same footing and therefore will be treated as equivalent to the rest of the dues. That's my own view. Now, Sanjay ji, we will. I see your hands going up, but let's wait for some more time before we take up questions. I'll be happy to interact with all of you. Let me proceed to the CRP cost and liquidation cost. And this is where, as I was mentioning, recently IBBI has proposed an amendment to say that amount towards loss or penalty incurred on account of non-compliance of any provision will not form part of CRP cost. This is the amendment made 4th July 2022 in the so-called IP amendment regulation. I'm hoping that at some stage during this two-day event, you'll probably be able to discuss it threadbare, and if need be, put up an appropriate representation. Another very interesting observation rather, in the ruling of Sunil Kumar Jain versus Sundaresh Bhatt. I don't know whether I feel to read it differently, but मेरे को लगता है कि पता नहीं मैंने पढ़ने में भूल किया, लेकिन मतलब ये निकल रहा है कि इवन ड्यूरिंग इंसॉल्वेंसी अगर कोई वर्कर, अगर कोई एम्प्लॉय कंपनी में काम कर रहा है, तो उसकी सैलरी भी तभी पेबल है इफ द कंपनी वाज एट ए गोइंग कंसर्न। मैं तो समझ नहीं पा रहा हूं कि रेजोल्यूशन फेज में कोई आदमी कैसे डिसाइड कर सकता है कि कंपनी गोइंग कंसर्न नहीं है। माने आदमी मरा नहीं और आदमी को मरा हुआ मान लें आप, तो समझ ही नहीं पा रहा हूं कहां से ऐसी बात आ गई। बिकॉज my understanding is that it's only on pronouncement of the death verdict which is commencement of liquidation. That's a death verdict. उस दिन से भले आदमी को मरा हो मान लो, मरने का प्रोसेस लास्ट इज लाइक डिसोल्यूशन, बट नो कंपनी कैन बी टेकन टू बी नॉट बीइंग अ गोइंग कंसर्न ड्यूरिंग इंसॉल्वेंसी। भी तो आप रेजोल्यूशन की बात ही क्यों कर रहे हैं? अगर आप बोल रहे हैं कि कंपनी गोइंग कंसर्न नहीं, रेजोल्यूशन की बात कैसे कर सकते हैं आप? रेजोल्यूशन किसका होगा? रेजोल्यूशन तो उसी का होगा ना जो रेस्क्यू कर सकते हैं, जिसको रेस्क्यू और रिवाइव कर सकते हैं, उसी का रेजोल्यूशन हो सकता है। जो गोइंग कंसर्न है ही नहीं, उसको रेजोल्यूशन कर ही कैसे सकते हैं? तो सुप्रीम कोर्ट के मुंह से इस तरह की बात आना कि ड्यूरिंग सीआरपी इफ इट इज गोइंग कंसर्न नहीं होने का सवाल ही नहीं उठता। बट कोर्ट वर्डिक्ट बोलता है कि अगर गोइंग कंसर्न नहीं है तो एम्प्लॉय की सैलरीज और वेजेस आल्सो कैन नॉट बी टेकन पार्ट ऑफ इंसॉल्वेंसी रेजोल्यूशन कॉस्ट। तो एम्प्लॉय को पैसा कहां से मिलेगा फिर? अगर कोई एम्प्लॉय या कोई वर्कर रेजोल्यूशन के दौरान कंपनी में काम करे, जो कि करना ही होगा, क्योंकि रेजोल्यूशन के दौरान तो आपको कंपनी को चलाना है, तो कंपनी चल रही है, एम्प्लॉयज काम कर रहे हैं, वर्कर्स काम कर रहे हैं, तो उनको वेजेस आप नहीं दोगे? तो वेजेस नहीं देंगे तो काम क्यों करेगा? सरप्राइजिंग, बट दैट सीम्स टू बी, आई डोंट नो, मेरे को लग रहा है somehow the jurisprudence on insolvency जो जिस तरह की एक्सप्लोरेटरी पोजीशन में हमने jurisprudence को छोड़ दिया है। आई एम मेकिंग a very humble suggestion, but I think a very important point कि इतने critical questions को अगर हम कोर्ट्स पे छोड़ देंगे तो थिंग्स बिकम एक्सट्रीमली अनसर्टेन। बिकॉज कोर्ट्स को पहली बात क्या है कि इट्स सर्कमस्टेंशियल रूलिंग। कौन सी सर्कमस्टेंस में दिया रूलिंग में से कौन सा सेंटेंस उठा के हम कहां पे लगा देंगे, ठीक नहीं है। तो ये जो एंड आई थिंक दिस रूलिंग इज फेयरली रीसेंट, सुनील कुमार जैन वर्सेस सुंदरेश भट्ट, इट सीम्स टू से कि एम्प्लॉय की वेजेस भी तभी देंगे व्हेन द एंटिटी इज गोइंग कंसर्न, दैट द रूलिंग पर्टेन्स टू सीआरपी, नॉट ड्यूरिंग लिक्विडेशन। एनीवेज, likewise on case of liquidation cost, as to what all will form part of liquidation cost, interim finance को लेके इसमें कुछ amendment कुछ है, but I guess interim finance interim finance का I believe there's not much of traction. There's hardly an interim finance being done. No lenders are comfortable in doing interim finance. इंडिया में पिकअप कर नहीं पाया। Globally, DIP funding is a very big business. India में somehow interim finance has not picked up. Maybe lenders are still not finding great comfort कि कितना पैसा मिलेगा कि नहीं मिलेगा, certainty क्या है. I think maybe time taken in addressing issues is also extremely low. टाइम टेकन आप देख रहे हैं, कहाँ साल भर की हम बात कर रहे हैं, कहाँ 3-3, 4-4, 5-5 साल मामले खींचे जा रहे हैं। एक साल तो एनसीएलटी में 1.5-2 साल तो ऐसे ही लग जाता है विदाउट द मैटर कमिंग फॉर सब्सटेंटिव हियरिंग। ऑल ऑफ यू आई एम श्योर are having the same experience as I have. I think it cannot be different, I'm sure. Now we come to a very important question of workmen's dues. Like I said, workmen's dues, there are many unresolved questions. And I do believe that IBBI is currently working on some kind of synthesization of various provisions relating to workers. We will not be able to spend a lot of time because my idea basically is to talk more about secured creditors point of view. Secured creditor versus workmen. Like I said, workmen's dues, make gratuity fund, provident fund are important questions. Mojabe ruling is NCLAT ruling is already there, but like I said, Supreme Court has probably reserved decision on that. Termination dues, employees termination, that's another important point. When liquidation commences, employment contracts automatically get terminated. Industrial Disputes Act provides for payment of termination compensation, retrenchment compensation on termination. Industrial Disputes Act में there is no exception to say that if retrenchment or termination of employment happens because of liquidation, it will not be taken as, it will not result into obligation to pay retrenchment compensation. So the question therefore is that also a part of liquidation cost? Is that also a part of workman dues? Now, I would say personally, once again, I would say my view is yes, it's a part of workman's dues. Whatever dues are payable as per, labor related laws. Industrial Disputes Act surely is one such law. Sorry for the interruption. Just give me 1 second. So retrenchment or terminal dues are also a part of workman's dues, and therefore we'll have to rank in terms of 53(1)(b) or 53(1)(c) if it relates to employees. That's as far as wages. And like I said, there are a lot of rulings defining what are wages, dearness allowance, bonus allowance, unavailed leave, compensation for termination, etc. Ex gratia is not a part of workman's dues. Let's now proceed and talk about some very important decisions on secured creditors dues. Given the limitation of time, I'll be focusing on 2 or 3 important points. All of which these points are extremely important. First of all, when we say secured creditor, secured creditor means what? There has to be security interest. And like I said earlier, I'm reiterating, the security interest has to be as per the laws relating to creation and perfection of security interest. Creation of security interest is done as per common law, as per contractual law. For example, there's a hypothecation that has to be backed by hypothecation agreement. If there's a mortgage, there has to be mortgage as per Transfer of Property Act. If there's a pledge, there has to be pledge as per Contract Act. So the relevant law, whether the TP Act or contract law dealing with creation of security interest, will have to be in place. I cannot assume that the debt is secure debt. Next question is one of perfection of security interest. Perfection meaning what? Perfection is the process of registration. Companies Act, for example, Companies Act provides for registration of charges. If the charges are not registered, the charge will be void as against the liquidator. That would mean for the liquidator, the charge will not be captured as a charge if the charge is not registered. So registration of security interest is also a critical condition. And there is another provision which is commonly not even noted, which is provisions of Insolvency Act. Insolvency Act also has similar provisions to say that there is a priority to a secured creditor whose security interest is registered with CERSAI. So Insolvency Act does not say that if it's not registered as per CERSAI, the charge will not be valid, unlike Companies Act. Insolvency Act does not say CERSAI unregistered charge is invalid. It doesn't say that. But it does say that if it is registered in CERSAI, it will then have a priority. Sorry for this little intervention because I'm having a bad throat. Now I'm talking about some of the rulings which have been fairly recent and very significant rulings. One ruling is the right of secured creditor under Insolvency versus rights under IBC. This is ruling in the case of RCM infrastructure. Once again, a fairly recent ruling talking about rights of secured creditor under Insolvency versus rights under IBC. Let me give the perspective. Insolvency process, I'm sure you're all familiar. होता क्या है कि अगर किसी सिक्योर्ड क्रेडिटर के पास एक स्पेसिफिक एसेट्स पे राइट है, I have a right over a specific asset which I think can be sold separately. No secured creditor will be waiting for insolvency, क्योंकि ये तो बेवकूफी होगा. If मेरे पास अगर ऐसी एसेट है जो I have a sole security interest, first charge and the exclusive charge over an asset, and the asset is peripheral asset, I can sell it without disturbing the rest of operations. A secured creditor will normally use surface. He would have used it much before the commencement of insolvency. So, because उस केस में I am the exclusive claimant, I'll be having the right to repossess, I'll be having the right to sell. अगर more than one secured creditor है तो they have to take a collusive action. वहां पे once again there is a question of 60% vote. Wherever there is a question of collective exercise of wisdom by the bankers, I'm sure you will also have faced this issue so very often. जब बैंकर्स को डिसाइड करने का मौका आता है तो डिसीजन मेकिंग में इतना दिक्कत होता है. कलेक्टिव डिसीजन मेकिंग ऑफ द बैंकर्स वो आता ही नहीं कभी. कोई ना कोई रीजन से पीपल कंटिन्यू आई मीन डिलेइंग मैटर्स. तो वहां भी मेरे को लगता है कि पैरी पैसू सिक्योरिटी इंटरेस्ट है तो सरफेसी वाला एक्शन भी होता नहीं होगा, बिकॉज लेंडर्स कंटिन्यू टू डिले थिंग्स. बट सपोजिंग एक्सक्लूसिव सिक्योरिटी इंटरेस्ट है, लेंडर ने सरफेसी नोटिस देके एसेट को सीज कर लिया. 13/2 इज द गिविंग ऑफ नोटिस, 13/4 इज द रिपोजिशन एक्शन. आपने रिपोजेस कर लिया, एसेट को रिपोजेस कर लिया. रिपोजेस करने के बाद यू गेट अ राइट टू सेल. 30 डेज नोटिस उसमें भी देना पड़ता है. तो आपने सपोज रिपोजेस कर लिया, 30 डेज नोटिस दे दिया. 30 डेज के बाद द लेंडर कैन सेल ऑफ द एसेट. सपोज आपने एसेट को सेल भी कर दिया, एसेट को सेल कर दिया, ऑक्शन कर दिया. somebody has bought the asset. That person also who buys the asset under SURFACE has to make payment. तो पार्टली तो अर्नेस्ट मनी डिपॉजिट वहां भी है, ईएमडी नॉर्मली इज पेड. फिर वहां भी हम बोलते हैं 25% पेमेंट शुड बी मेड विद इन लेट्स से 48 आवर्स और समथिंग, एंड देन वी से रिमेनिंग पेमेंट हैज टू बी मेड विद इन एक्स नंबर ऑफ डेज. तो सम बायर हैज बॉट द एसेट, पेड दैट 25% मनी, बैलेंस पैसा देने का टाइम आया नहीं, इसलिए 25% पैसा देके बैठा है. इन द मीन टाइम समझिए, सिक्योर्ड क्रेडिटर ने एसेट को रीपो कर लिया, रीपो करके सेल नोटिस दे दिया. सेल नोटिस देने के बाद ऑक्शन कर दिया. ऑक्शन करने के बाद किसी ने ऑक्शन में खरीद लिया, खरीद के 25% पैसा भी दे दिया. इसी बीच में कॉर्पोरेट डेटर का इंसॉल्वेंसी चालू हो गया. इंसॉल्वेंसी चालू हो गया तो मोरेटोरियम अप्लाई कर गया. अब हम क्या बोलते हैं कि मोरेटोरियम लग गया, तो क्या मोरेटोरियम विल इंक्लूड दैट एसेट आल्सो which is actually repossessed by a lender and which has been sold by the lender. ऑक्शन में सेल सक्सेसफुल हो चुका, बायर ने 25% पैसा भी दे दिया. यहां आके सुप्रीम कोर्ट बोलती है कि द एसेट इज स्टिल सेल सर्टिफिकेट आपने इश्यू नहीं किया. सेल सर्टिफिकेट आप इश्यू करेंगे तब 100% पेमेंट आ जाएगा. सेल सर्टिफिकेट इश्यू किया नहीं, इसलिए सेल हुआ नहीं. सेल नहीं हुआ तो इट कम्स अंडर मोरेटोरियम. अब आप थोड़ा सा ये समझे कि कौन ऐसा बायर है जो ये जान के 25% पैसा देगा कि मेरे पैसा देने के बावजूद मैं पहली बार ऑक्शन में बिड कर रहा हूँ, अर्नेस्ट मनी दे रहा हूँ, 25% पैसा दे रहा हूँ, एंड आई एम अवेयर ऑफ द फैक्ट कि कल को अगर इस बीच में इंसॉल्वेंसी चालू हो गया तो मेरा दिया पैसा बेकार, बिकॉज द एसेट मनी. ये तो ठीक है कि एसेट पैसा आपको शायद वापस मिल जाए, बिकॉज बैंकर विल बी लायबल टू रिटर्न द मनी. बट बैंक रिटर्न करेगा तब करेगा, व्हाई डिड आई टेक ऑल द ट्रबल ऑफ बाइंग एन एसेट, evaluating and making a decision to buy an asset which I'm not even sure whether I'll successfully buy it or not, because इस बीच में इंसॉल्वेंसी चालू हो गया. I don't know, but प्लीज समझिए कि ये अगर इंसॉल्वेंसी सेल नहीं होती, नॉर्मल सेल होती, इंसॉल्वेंसी की बात भूल जाइए, नॉर्मल सेल होगी, किसी नॉर्मल एसेट को सेल कर रहे हैं. When does the sale happen? In normal sale of goods act, when does the sale happen? Sale happens when payment is done, or sale happens when it's agreed to be sold? Because payment तो बहुत केस में 60 दिन के बाद, 90 दिन के बाद, कई केस में 4-4 महीने के बाद पेमेंट आता है. सेल कब होती है? Sale happens when it's agreed between parties that the sale has happened. तो ऑक्शन के केस में, लाइक ऑक्शन लॉ वाज द हैमर, जब गिर गया तब ऑक्शन हो गया. सेल ऑफ गुड्स एक्ट सेज व्हाट, ऑन फॉल ऑफ हैमर द सेल टेक्स प्लेस. ये ई ऑक्शन जो होता है, यहाँ पे फॉल ऑफ हैमर क्या है? जो ऑक्शनियर का जो जो ऑक्शन प्लेटफॉर्म प्रोवाइडर है, वो बोलता है ऑक्शन इज सक्सेसफुल, दैट मोमेंट द सेल हैज हैपेंड. सेल हैज हैपेंड, पेमेंट इज स्टिल ड्यू. सेल से क्या कनेक्शन है? पेमेंट कैन ऑलवेज हैपन सब्सिक्वेंटली. पेमेंट विद क्रेडिट भी दे सकते हैं, आप नॉर्मली क्रेडिट प्रोवाइड भी करते हैं. बट इज इट ओके टू से सेल हैज नॉट हैपेंड? अगर सेल हो चुका, then the property is moved away from the company. The property is now the property of the buyer. So how can the buyer's property, the buyer has paid a partial payment already, how can the buyer's property be included in insolvency of estate of the seller? I am, well, once again, with extreme great respect, but I think this ruling also virtually makes SURFACI Act completely redundant. That wasn't the idea. Idea SURFACI Act क्या? SURFACI Act is self-help law. Help yourself. Insolvency law is collective help. Insolvency is collective remedy. SURFACI is singular remedy. मेरे को अपने आप को अपना पैसा रिकवर करना है. I don't care for others. I recover my money. That is the thrust of SURFACI Act. Insolvency is a rarity. SURFACI is something which is far more in prevalence than insolvency law, but somehow, I mean, the way the jurisprudence is developing, we made SURFACI Act completely redundant. Then comes another ruling, which is also highly disturbing ruling, because this is also going against one of the very, very time-tested principles of insolvency law. ये ruling क्या है मैं बता देता हूँ, but I think coming from the NCLAT though, and I'm almost hopeful that this ruling at some stage will get a Supreme Court ruling to maybe either uphold it or reverse it. ये ruling क्या बोलता है? And I think once again a very common feature of secured creditors, there is a first charge holder, the second charge holder, there may be a subservient or subsequent charge holder also. It's quite possible एक asset का value 100 करोड़ का है, first charge holder का 30 करोड़ का claim है, is the first charge holder. 70 करोड़ value फिर भी बच गया, we can create a second charge on the asset. Suppose second layer में भी 30 करोड़ आ गया, तो we still have a value left, we can create a subservient charge also. So it's always possible to create charges in different priorities, first charge, second charge, third charge, and so on. Conclave ने ये अनिल कुमार आंचलिया वर्सेस बाला टेक्नो, अनिल कुमार आंचलिया लिक्विडेटर ऑफ बाला टेक्नो, इस रूलिंग में बाला टेक्नो ऑफ कोर्स इज अ कैलकाटा बेस्ड कंपनी, द रूलिंग इज ऑब्वियसली गॉन फ्रॉम कैलकाटा. दिस रूलिंग सेज कि if the creditors have relinquished security interest, which is why they come under 53(1)(b), having relinquished security interest, the priorities have no meaning at all. This is, I mean, absolutely going against time-tested principles of insolvency law.
This has been stayed by the Supreme Court recently, 2 days back.
Thank you, Jitenji, for mentioning that. Likewise, the ruling in Technology Development Board is also stayed by Supreme Court. Both the rulings are stayed. And Jitenji, thank you for the update. So I was mentioning that this ruling, इसमें हो क्या रहा है? Again, I'm with greatest respect to the appellate bodies and the adjudicating bodies. हम somehow क्यों भूल जाते हैं कि इंसॉल्वेंसी लॉ लिखने वाले हम लोग दुनिया के, मतलब इंसॉल्वेंसी लॉ इंडिया ने इजाद नहीं किया. इंडिया इज नॉट सॉर्ट ऑफ इन्वेंटेड इंसॉल्वेंसी प्रिंसिपल्स आर ग्लोबल प्रिंसिपल्स. इनफैक्ट टाइम एंड अगेन बीएलआरसी रिपोर्ट वेंट बाय यूनिसेट्रल प्रिंसिपल्स. यूनिसेट्रल का प्रिंसिपल इसी को लेके हमने लॉ बनाया है. ये ग्लोबल प्रिंसिपल क्या है कि कॉन्ट्रैक्चुअल प्रायोरिटीज को हम डेविएट नहीं करेंगे. कॉन्ट्रैक्ट में प्रायोरिटी, एक आदमी ने बोला मैं नंबर 1 हूं, एक आदमी ने बोला मैं नंबर 2, तीसरे ने बोला मैं नंबर 3 हूं. जिसने अपने आप को नंबर 3 बताया वो नंबर 2 की प्रायोरिटीज को एक्सेप्ट कर रहा है, नंबर 2 वाला नंबर 1 की प्रायोरिटी को एक्सेप्ट कर रहा है. तो जब प्रायोरिटीज को क्रेडिटर्स ने एक्सेप्ट कर लिया तो हम क्यों बोलते हैं कि इंसॉल्वेंसी में आके उनकी प्रायोरिटीज का मतलब नहीं रहेगा? सेक्शन 52 और सेक्शन 53(1)(b), इन दोनों के बीच में कोई लड़ाई नहीं है. 52 क्या बोलता है कि वेल इफ आई वांट आई कैन सेल इट आउटसाइड. Instead of joining the collective process, I want to sell off the asset myself. I'm allowed to do it. I will not relinquish security interest. I am allowed to sell the asset myself, as one would have done in SURFACI. Selling under 52 is similar to selling under SURFACI. I would have sold it separately. I will sell separately. But if I decide to relinquish, इसका मतलब थोड़ी कि I've given up my priority. Where is the question of giving up priority? Because no one would be willing to relinquish security interest if I say I'm a first charge holder. I get subrogated to the position of a third charge holder if I relinquish security interest. On the contrary, if I say the first charge holder is reduced to position of a pari passu charge holder, is doing advantage to those who are second charge holders. तो So the question of disrupting or disturbing the mutual priorities under 53(1)(b) does not arise at all. In fact, I would contend, we actually wrote an article on this also, which was carried in the last year's edition of IBBI's annual. IBBI comes with an annual publication. We have written an article, myself and my colleague Shikha Bansal, on this very issue about novel priorities and the potential conflict between section 52 and 53(1)(b. हमें बोल रहे हैं कि 52 और 53(1)(b के बीच में झगड़ा है ही नहीं, हो ही नहीं सकता. Because the moment you relinquish security interest, your priority still is the same. आपने जितनी वैल्यू आपकी एसेट की थी उतनी वैल्यू आप लिक्विडेशन एस्टेट में डाल दें, and your rights under 53(1)(b will be exactly the same as they would have been under section 52. Just that collective process में आने के कारण there is better probability of a better realization, because many assets are better sold together than sold separately. So this is I was referring to the ruling of Bala Techno's matter, and similar ruling of NCLAT in the matter of Technology Development Board. In fact, the jurisprudence on this has already been developed by Supreme Court earlier under the Companies Act in the case of Sidco Leathers. And Sidco Letters, I mean, sets this very principle कि आपने contractual priority set कर ली, those priorities will prevail. People are not appropriately reading the provisions of section 53, which talks about creditors of same rank. Creditors का rank same है, then the rights will remain the same, but the creditors' rights are not the same. In that case, the contractual priorities will be disregarded. So I'm saying this is something which is globally the principle. Now, I think I'll not be maybe spending much time, and I'll straight proceed to some other, another very unresolved question is fixed versus floating charge. Yeah, fixed versus floating charge also is a concept which is time-tested distinction in law. But once again, maybe over time, courts have sort of ignored the fixed charge, floating charge distinction. As between fixed and floating charges, fixed charges have a priority. Floating charge only, not fixed charge at all. Floating charge holder has a second rank. Fixed charge holder having right over ascertainable assets ranks above the claims of fixed charge, floating charge holder. This principle always was there in 56 Act, in 2013 Act also. But when it comes to IBC, the entire BLRC report does not make a mention about floating charges at all. And I think that does not anyway deviate from the basic principle that fixed versus floating charge, the priorities still are the same. I have talked about section 52 or section 53. Once again, I'm reiterating that section 52 gives the right to sell separately. 53 gives the right to claim the same money but through a collective process. Neither is the creditor doing away with his right, nor is he doing away with his priorities. I think I should stop here and look at the queries which have probably come on the comment box. But if there are any other queries, no, I think comment box only is from the sponsor or from the host saying don't put questions now. All questions will be taken after I finished. Friends, it would be a great pleasure to interact with all of you, and Sumitji and Jitanji, time permitting, I'll maybe love to stay for whatever time possible as per schedule to interact with people. So please let participants be free to put up questions at this stage. Thank you very much.
Thank you, Vinodji. I think few questions we can take right now, and then we'll start with the second session. Sumitji, is it right?
Yeah, absolutely.
Yeah, so I start with the question. One question I am having basically. So Vinodji, during the CRP process, as you rightly said, that the security interest of the relevant financial creditor, secured financial creditor, must be kept in mind. Now, as a insolvency professional, while determining the dissenting financial liquidation value for each of the financial creditor, what liquidation value should I give? Should I give it as per the voting percentage or as per the security interest? When does this, you see, if I'm able to give the liquidation value as per the security interest, this problem might be resolved. But as per the Supreme Court order, Amit Matalik, is it not saying that the liquidation value has to be given as per the voting share? So I just wanted to on
I
this.
think I made the same point, Jitanji, that the ruling of Supreme Court in Amit Metallics is talking about equal treatment, not equitable treatment. Whereas the insolvency principle is equitable. Liquidation value is defined as the value that would be accrued to the creditor if the entity was to go into liquidation. The whole concept of liquidation value is that if liquidation was to be ordered today, what will the value be? That would mean the actual value of security interest. No question of looking at the voting percentage. Supreme Court has gone by the principle of preponderance of the decision of the creditors committee. So here the financial creditor in question has to be dissenting. He has to say, I dissent from the resolution plan, and therefore I am entitled to as much value as is the value of security interest. The Amit Metallics ruling is, of course, not entirely, I mean, the facts may still be different, but in terms of principle, the question of paying to anyone less than, otherwise, if the creditor in question, well, during insolvency, of course, question of SURFACE Act also does not come. But if somehow the insolvency does not succeed in, let's say, the next phase, which is liquidation would start, you can use section 52 and not let the asset be taken as a part of liquidation. So my view would be it should still be the value of the asset securing the creditor, not the voting percentage. Voting percentage is based on claim, whereas liquidation value is the value of the underlying asset.
So we have, do we have any other question?
Yeah, I have a small question, Vinod sir. It's maybe a bit of out of the box question, because we all who are doing in assurance business stat audit, and in Caro there is a recent change where we say that the company will be able to meet its liability in next 12 months. And if the company goes in IBC, whether an auditor can be made part of IBC. What I understood from Sumit sir also a few months back, Hyderabad court send a notice to the auditor also. So whether an auditor can be made party for IBC.
Well, I'm not aware of the Hyderabad notice that Sumitji has probably seen. But the issue is that every auditor, when you're preparing the financial accounts and doing the report on that, you're taking a view on going concern. Accounts are prepared on going concern basis. What exactly is the meaning of going concern? Going concern assumption is that the present situation of the business of the company is such that we do not foresee a solvency problem in next 12 months. On the day on which you sign the financial statements, you don't see a problem of solvency. That is the company getting into insolvency within the next 12 months. That doesn't mean the auditor is guaranteeing solvency beyond money. If there is such a big, deep issue in the company that the company may go into insolvency. I recall that at one point of time, in a different capacity, I was sitting on a board of a company, and there also there were some 6,000 crores worth of losses. And they were banking on DTA, deferred tax assets, to say that with the DTA we'll be able to revive. But there also it was a very difficult question for the auditor to say that the company is still a going concern. But yes, you are right. There's no, I don't see the auditor being held responsible for signing an opinion which is not qualified in terms of Caro. But I'm sure the attention of the auditor is being drawn. Caro report is drawing the attention of the auditor on this problem, that if you see a deep deficit, you see a huge amount of brought forward losses, or you see the assets are seeming not recoverable. Dead assets, dead stock, dead inventories, dead receivables are lying for months altogether. Take a considered call on whether the entity is still a going concern. Mr. K.S. Ramesh has probably raised his hand.
I am talking about this PF. Before this Sunil Kumar Jain case, what we have done is whatever is the contributions not paid to the department, including deduction from the employee, we have treated it under section 36 and remitted to PF department. And the balance we have treated as crown debt and put it under section 53, whatever penalties the PF department was claiming. Now you have clarified that all said and done, once the PF is deducted from the employee, it's in trust. So we paid interest of 12% on that. Will that be going to the credit of the employee, or the department will take it away? So that is what my doubt is. When whatever is due to the employee is in trust, whether it is employee's deduction or employer's due.
Now, like I said, the finality on this is yet to come. because Mojarbe ruling is seemingly, I was told recently that the hearings have been concluded and the court's decision may be coming in maybe weeks or soon. So we don't know as of now, but I'm just talking about my views. And once again, I'm detaching my role as insolvency professional myself and talking academically. Academically, the employer's deduction, which is not paid by the company, is very clearly a case of trust, because that was not my money. I'm simply a fiduciary. So that's definitely a amount held in trust and therefore should be treated as not being a part of liquidation estate. Employer's own contribution was equivalent to the claim against the employer. So that is definitely a claim of the employer. For example, wages are a claim. Wages are a claim against the employer. Similarly, the employer's contribution. As regards interest or any penalties imposed by the department, penalties, of course, are penal in nature. So that, as you rightly mentioned, becomes a state due, crown debt, and therefore goes under priority number 5. Interest, I think that there might be a debatable question on that, because during liquidation, the question of paying an interest does not come. During insolvency process, well, interest is compensatory. So I think it would be okay to treat interest also as a part of claim against the estate of the company. But rest of the fund, for example, gratuity fund or other funds, to my mind, these are, if it's not paid already to the fund, it's a claim against the company. It should be part of wages or employee dues, as the case would be. But let's wait to see what the Supreme Court verdict is in this matter. Thank you very much. So it's been very interesting interacting with all of you, and Vivek ji and Jitin ji and Sumit ji, thank you for the opportunity.
Before that, I request Vice Chairman IBC Conclave Committee Arun Gupta ji to give formal vote of thanks to our guest speaker Vinod sir. Please unmute yourself, Arun ji.
Sorry. So thank you, Vinod ji, for an enlightening session. And a lot of our questions got clarified through your deliberations. And these issues are very sticky issues. And even though the law makers and the draftsmen have tried their best, but with all such peculiarities and all such circumstantial situations, I think jurisprudence still has to develop and address a lot of these issues. So thank you very much again for sparing time and sharing your thoughts with us. Thank you so much. And I'd like to present the e-memento to you, sir, for taking out time. So I'll request all the participants to kindly carry this vote of thanks with a round of applause, and we'll present this e-memento to Mr. Vinod Kothari.
Thank you very much. Thanks a lot.
Thank you, sir.
Thank you, Vinod ji. Now I request Shivang Chaparia to kindly introduce our next speaker for the day, Vinit ji.
Thank you, sir. So with pleasure, I would like to invite our next speaker for the day. Mr. Vineet Chaudhary is a practicing company secretary and founded Messrs. VK Chaudhary and Company in 2001, now known as VKC and Associates, and has integrated and well-knit set up a practicing firm of company secretaries. He has a wide network of the professionals in the country, and his presence as such is in Pan-India also. He is popularly known as VKC in the corporate law professionals fraternity. He is also a founder partner of VKC Restructuring Professionals LLP, which is a conglomerate of professionals coming from all walks of corporate restructuring consultancy, be it legal, financial, or insolvency resolution. The strength of VKC Restructuring Professional LLP is the blend of dedicated, proactive, and senior team with enthusiastic young team of Gen Next. He has also led several significant assignments, providing both hands-on legal advice as well as overall strategic inputs. He is thorough professional with highest degree of integrity and is a resource person for the implementation of various ease of doing business in India and e-governance initiatives in the Ministry of Corporate Affairs, Government of India. His skill set of opinion in issues surrounded under discussions is what sets him apart. A man of substance and hard work, believes in team spirit, and wears passion and compassion with no compromise. We welcome you, sir.
Thanks, Shivang. Over to Vinitji. Without further ado, let's keep ourselves abreast with the updates from Vinitji.
Thank you very much to the organizers, ACAE Kolkata, the elite professionals community, and it is indeed my pleasure to be amongst all of you today to discuss on this conclave of IBC, Intricacies of IBC. I'm sure we have worthy speakers, faculties, and you all are very learned so far as IBC is concerned. And the topic which has been assigned to me, suiting to my profession as a company secretary and insolvency profession, that how I look at the compliances part so far as the Companies Act and the SEBI laws are concerned. So thank you, organizers. I know this is a very new topic, and compliances, we never thought of it when we started with the Insolvency and Bankruptcy Code in 2016-17. It was not even 1 year. When even today we are talking about the law is evolving, jurisprudence is coming out, and still we are waiting on various aspects that the law should be clear. The compliances came as a bomb to us in 2018 to start with the 3rd of January itself. Many big cases, 12 cases, I'm sure few of us are the part of those big cases. When on the table, the questions relating to the various compliances relating to the listing compliances, particularly LOR, LODR, and compliances under the Companies Act is started. We have different set of the regulators, and having been in professionals, we all understand that harmonization of the law, sometimes it become a very, very difficult exercise. So with this, when the discussions were going on in 2017, there had been certain contentious issues so far as the compliances. There had been claim, counterclaims, and allegations also on the professionals. The Insolvency and Bankruptcy Code, and the board came out with one circular on 3rd of January 2018 in the form of IP 002/2018. And this is started, that point what we are discussing today, that what are the compliances relating to the CIRP and liquidation, and what is the role of the insolvency professionals so far as the compliances are concerned. Primarily, we understand insolvency professionals who are there to facilitate the resolution process, or if the resolution fails, to do the liquidation of the company and distribute, as we just discussed. So friends, after taking the session, when Vinod Kothari ji has taken the session on a technical subject, it has become very, very difficult. I do not know how to keep the the order of the house and warm it, but I will try to what I understand from the various compliances, even if this is an area which needs further research and we have to see that what are the fallout for the non-compliances. But since we are under the obligations to comply with the every directions and the circular issued by the Insolvency and Bankruptcy Board of India, and also to comply with the directions which had been issued by the various adjudicating authorities, today we are here to discuss this very topic of compliances pertaining to CIRP. I have also prepared one small PPT. I would like to share that PPT to you to start with, and then we can have the questions and answers. I think everybody can see this. Screen pe hai?
Yes, it is there.
Thank you very much. So without taking much time, I know I have to be on that topic straight away I go. What I understand from this topic, this is new to all of us, for me also, and I will be learning from you. It is uploading. Just bear with me. Yeah. So, sir, I was talking about the circular of 2018 January 3rd. This was the circular actually which mandated the compliance of the laws applicable to the corporate debtor. And it very specifically talk about that insolvency professional acting in the capacity of IRP, RP, liquidator, whatever may be, has to comply with and need to comply with the provisions of the applicable laws. And when we talk about the applicable laws, it has opened the Pandora box. Act, rules, regulations, circular, guidelines, order, direction, etc. Everything they have written, whatever may be, you have to comply with. And they given a very beautiful example at that point of time, because that was a matter of contention, as I told you in few of the cases, because I was the part of those cases, so I know what kind of the counter allegations were going on. That LODR, if the company is a listed entity, the stocks are listed, debt or equity as the case may be, it has to comply with the every provisions of the SEBI LODR 2015. Subject to that, unless the provisions are specifically exempted by the competent authority, that is SEBI again, or become inapplicable by virtue of the operations of the law. So this came just like that, whether I need to comply and how to comply, because you know there is a complete department to look after the compliances, and so far as the law compliances are concerned, and LODR, it is not a simple subject. There are the number of interpretations. Having been audited to various listed companies, we have understood how the compliance has been a matter of, you know, the discussions and even arguments amongst the management and with the auditors also. But anyway, we have to comply with the directions, and as an insolvency professionals, if we are entering into this domain, now it is very clear since 2018 that we have to comply with the every provisions, whatever may be applicable to the corporate laws in carrying out his business activities. If it is a listed entity, it has to be complying with the LODR and other SEBI related legislations. So today we will be discussing only two which are important, that is LODR first, and then we have the PIT. How the PIT is also changing the game, we will understand. So this circular, when we have also been made to understand one very, very important thing, which you know, makes an obligation on the insolvency professionals to be aware with the applicability of various laws and compliances thereof. That was that the exercise of the reasonable care and due diligence which need to be taken care by the insolvency professionals to ensure the corporate is, you know, going through the corporate debtor comply with the applicable laws. So the expectations of the regulators was itself mentioned in the circular, that you have to take the reasonable care and diligence when you are carrying out the functions as IRP, RP or the liquidator, so far as the compliance of the laws applicable to the corporate debtor is concerned. And the most embarrassing part was that in case there is some non-compliance and some loss is suffered, this loss question was under debate, as I told you, that the corporate debtor has suffered the loss because of the action or inaction of the insolvency professional, IRP and RP, and who would be responsible, why the COC should bear the burden of the non-compliance is cost and penalties. Then who will take it as a question and still remain a question. But they say that will not become the part of the CRP cost. So the any kind of the loss or the penalty imposed by any regulator during the process would not be the part of the CRP cost. And to that extent, they have made that the IRP or RP, whosoever may be insolvency professional, shall be responsible for the non-compliance of the provisions. So this is something which is really a matter of concern, which require us to update ourselves with the various compliances and to take care of the reasonable things like reasonable care and diligence when we are exercising our function. Now, to move forward, let us understand the framework. With the CRP commencement or the liquidation proceeding started under section under the provisions of the Insolvency and Bankruptcy Code. I am not going into the technicalities of the Insolvency and Bankruptcy Code section by section. I would like to confine myself to the compliances envisaged under the Companies Act as well as under the LODR, and to what extent we can comply with and how to comply with, what is the framework, how the digital and technology has changed the compliances regime, and how we need to update ourselves by which we can do the compliances well in time. Please remember the compliances under the Companies Act as well as under the SEBI laws, that is particularly LODRs, are time-bound compliances. Like insolvency profession is a time-bound profession, like every compliance has to be within the timeline. The similar is the case here. So with the suspension of the power of the board, the power is vested with the insolvency professionals acting in any capacity, IRP, RP, section 17, 25 or 35 under the liquidation. It mandates that you have to comply with this circular. The compliances come on the head of the insolvency professional. So today we will discuss IBC 2016 and Companies Act 2013 read with MCA various circulars. As I told you, because they have written very clearly the circulars, guidelines, act, rules, regulation, etc. had to be complied with. So majority are coming out of the circulars, in fact, not by the substantive law. Like we have the IBC. IBC has been completely changed when we see the regulation, the way the regulations have been, sometime in overriding and sometime in prescribing the procedure, which is not even envisaged in the law. But we have to comply. We have no other choice. So SEBI LODR read with the various circulars issued by the NSE and BSE. As you know, the SEBI is the prime regulator so far as the securities market is concerned. But the companies are having the agreement with this stock exchanges wherever the securities are listed. So SEBI prohibition of insider trading regulations is another area of concern. In the recent past, we have seen they had made certain changes also in the insider trading regulations. Even for the CRP companies, they have provided an electronic platform for the surveillance recently in this month itself. On the 20th of May itself, they have done it electronic platform for the surveillance in the pricing and the scripts, how they are being traded in the market. So far as the other laws, revenue laws, social benefit laws, or we have been talking about the sectoral specific laws, there are the other laws which are applicable, in which the segment the company is. This is a big area where the number of the laws are applicable. We have to be dependent on the experts, or we have to engage the experts of that industry. Maybe we have to carry on with the officers who have been the charge of those compliances. So number of the laws are applicable to the business entity depending on the segment. We have to take care of those laws also, because the circular is only giving an example of LODR. It is not confined to the Companies Act and the LODR. These are the primary legislations which you can say so far as the company is concerned, but equally important are the other legislations under which the company is carrying on the business operations, from where you are having the license to carry on the business operations. So the role of the insolvency professionals, we can understand generally. Then after this 2018, the ministry, there has been pandemic time. We have seen that after this circular, there was a pandemic time. In 2020, we entered into the pandemic time. But immediately before that, there was a circular number 4 by 2020, which was issued, General Circular by Ministry of Corporate Affairs in this regard. The basic objectivity that while insolvency professionals is carrying on insolvency process as a CRP or liquidation, he shall exercise reasonable care and diligence to take care of all the necessary steps and ensure that the corporate data process is complying with all the applicable laws. So the general circular under the Companies Act, because MCA regulate the affairs of the compliances under the Companies Act. So they came out with their laws and how to comply with the various provisions of the Companies Act when the company is under the CRP or the liquidation. And at the same point of time, the SEBI also came out with the different set of the regulations. In terms of regulation 15, which talk about the roles and the function responsibilities goes to the insolvency professional. Now he has to comply with the regulations prescribed by the SEBI. So we come to the first part straightway, that how when the company goes to the CIRP or to the liquidation, what to do. The first part is to do immediately is the filing of the INC 28. This circular of the 2020, which was again, overridden or even withdrawn by supersession by the another circular in the next month itself. We will discuss that later on. But primarily the objective was given that you have to file INC 28. And the INC 28 carrying the order of the NCLT initiating the CIRP has to be filed, by which the database of the company, as you know, the MCA has a framework, and that is architecture. What we say architecture framework of the MCA is not driven by the e-governance. All kind of the filing, whatever it may be, has to take place through the MCA portal, and it is completely digitized in the context that it has a an architecture that who can file the form. For any corporate action, there is a filing and there is an authority to file that particular form. There is a compliance time frame for filing of that form. Now going with the insolvency and bankruptcy code, how to match, because board is no more in power. Somebody else has taken the charge, but he is not board. He is here to facilitate the resolution process. How to do the various compliances has been a question. The MC has also been debating that whether we are going to change the whole structure, whether we are going to change our complete framework and the architecture to incorporate the necessary changes which are required in terms of the insolvency and bankruptcy code and regulations made thereunder, looking at the various corporate actions. So what the solution they find it out to start with, they said if the company has gone to the CRP or liquidation, let it file INC 28, which is otherwise the requirement of the law that any order of the NCLT has to be filed with the registrar of companies within a period of 30 days in INC 28, and the master data of the company, which give the primary picture to the public at large, which is open for everyone, should change and should reflect the status of the company that it has gone to the CIRP or liquidation as the case may be. With this, they say file the form, and then what you will do, you will become CEO. So they come out with an idea, innovative idea, that insolvency professional would be deemed to be chief executive officer of the company because the templates of the form and architecture recognize certain persons who can file the e-forms, and CEO is one of them. So you cannot be director, you cannot be company secretary, you cannot be CFO. Then they found CEO because practically you are running the company. So you will be deemed to be CEO for the purpose of the various compliances and filing on the portal. So what are the compliances under the companies? Are primarily filing. What are the compliances under the SEBI is primarily is the disclosure, and compliances relating to the corporate action, that is LODR. So to do the compliances under the Companies Act, there has to be some signatory who is recognized by the MCA portal and by the architecture of the framework of the MCA 21 project, who can make the e-filing. So that was they identified through INC 20A. However, the circular talk about interestingly that after filing the form, it will be taken on record by registrar of companies after examinations, and what was happening, and thereafter you will be filing all other e-forms using the designation as CEO. I will demonstrate that through the example of how the portal behave. But immediately thereafter, they realize this is going to create a huge task for ROCs. There is a long queue, and the people are not understanding insolvency and bankruptcy code and how to make the modification in the database. The whole structure of the MCA was, just subject to question, because if electronic filing and e-governance allows somebody to do the manual intervention even at the ROC level, it will create the problem. So nobody can disturb the database of the ROC unless until it is supported by the duly electronic filing and then verified persons. And what was happening here, once some gentleman was coming who was not on the portal. So here are the two scenarios what we have noticed. What happens when the companies goes to the CRP? Yes, you can file INC 28 using the another methodology, but there can be chance the directors are available, or there the chance directors are not available, they are not signatories, or they are not cooperating. How to do the compliances? This has been a question of debate. I've been the part of various debate with MCA that how to do the compliances. You have to guide to the insolvency professionals and other professionals who are assisting the insolvency professionals in compliance of the circular issued by the IBBI, and do the necessary filing to your expectations within the compliance of law. So leaving apart what corporate actions can be filed and which cannot be filed, first of all, who would be filing and how it would be filing, and how the database would behave, how the master database would change, primarily giving in a message that the company has gone to the CIRP, and that has become a prerequisite for many corporate actions. So they came out with another circulars immediately. If you see in the March itself, general circular number 8, in super session of the general circular number 4 by 2020, they realized that the circular number 1 probably is not aligned with the thought what we are having, and they immediately took the steps and said nothing going. Let INC 29 be updated in such a way, the programming should be changed that moment it is filed on the portal, it should automatically change the database of the company, and there should not be any personal intervention from the side of the ROC to change the database and do it. So they added one row to this, and now if you see, after filing the INC 20 and an approval thereof, the database change, and there is a column comes that what talk about is the companies under the CRP or companies under the liquidation. Except voluntary liquidation, I will cover on that later on. So this facilitated, but the other forms of the filing, like CEO, still remain the same, and the protocol in the existing forms of architectures, they recognize insolvency professional, be in any capacity. I will not be repeating that IRP, RP, or the liquidator, that will recognize him as an CEO, and he will be able to file the various forms. Now the questions comes whether you have to file the forms in the form prescribed under the Act, or you have to just upload the corporate action which has taken place in the company, and you feel this action should reach to the database of the Ministry of Corporate Affairs. So both are the compliances. Now it is up to us how we take it. This is my personal opinion, what I am sharing to you. The law talk about that every kind of the form, whatever may be the corporate action you have, whether it is MGT 7, which you talk about annual return, or what you talk about AOC 4, that is financial statement of the company, can be filed through the GNL form 2 as an attachment. That is a general form with the general fees. Right after the commencement, you have to attach the document with the GNL2 and file it, sign it. What as an CEO? When you are filing the first form, you have to file it through others, because you are not recognized by the portal by the first form as a CEO. But second time, after the architecture has, the framework of the IMC 21 has recognized you as an CEO, you will be filing the form as CEO only. So company started doing these compliances, and that is another way we can do the compliances of the various corporate actions and the filings which are required to be takes place under the Companies Act. When I'm talking about various compliances, there are a number of compliances and corporate actions which are supposed to be filed with the Registrar of Companies based on the event or time frame, as the case may be, on annual basis or based on the a very particular compliances or very particular corporate action. So what happens? Let me take you through the practical side, how the forms behave and how it actually function. INC 28. I'm sure I'm able. You are hearing me well, and the screen is also working.
Yes, sir, to hear you.
Yeah.
Yes, absolutely.
This is the first form, INC 28, to start with. When you will be taking the charge and IRP, you have to file. In terms of the circular, as I told you, 8/2020, the first one has already been, withdrawn to that extent. You will go straight away, fill the SIN number of the company, and you will find that there is an option which has been given in the form itself that talk about what? 583. You will select the section of insolvency and bankruptcy under which the order has been passed. Then you will find a drop box. In the drop box, you can select any of the field: admission of the CRP, admission into the CRP under section 7, 9, 10. There is a 12A, there is a registration plan, there is an approval, registration plan, or there is a liquidation. Whatever may be the corporate action they want, they have just given in the form of drop box. You have to select it. And after selecting the form, what you need to do, you have to fill your name, capacity, IRP, RP, as the case may be. Go to the designation others and select the others. Why I'm talking others? Because by the time MCA portal has not recognized you, who are you? First, you have to, with this form, they will be giving the access to you to the MCA portal. And the similar we will find when you will go to the site of the LODR and to the stock exchanges. So others, with the others option, you will affix the signature, portal will take it. The forms has been accordingly amended. Initially, the form was not taking the signature. There other option was not available, but they have amended the, the programming of the forms, enabling the insolvency professionals to file the various forms in the returns and to start with INC 28. Next, as I told you, circular number 8/2020, what it talk about, that once you are registered, you have filed your INC 28, your database has been changed. You can file all kind of the corporate action as an attachment to the form GNL2. And they have given the guidance to file these forms also. So after filling the SID number, what you need to do, you need to go and select the filing of the insolvency and bankruptcy code. Like we used to use this form frequently for the purpose of the public issues. You will find red herring prospectus and for other returns under the Companies Act. But this, radio button has been created, that filing under the Insolvency and Bankruptcy Code 2016, and then you will attach the necessary corporate action, whatever maybe has taken place. It is a financial statement, it is an annual return, or as the case may be. This is the way the MCA circular talk about. This is the way I am highlighting the MCA circular talk about, because use the word shall attach all kind of the things in the JLN2 only. We go by this circular. If you have read that circular carefully. And then you have to select the designation, as I told you. Here is the CEO, and you can file the e-forms. Next. ROC compliances. If I talk about, when I was talking about, let me come back to this for a moment. This is because the circular talk about the filing compliances like this. But in practically what we can do and what we have been doing, if the signatories are active and your database is active, what happens if your database is inactive? Then what you will do? Even INC 28 will not be accepted. In that situation, you have to approach the ROC. The circular also give the way. Then you have to send in a request form. They have to entertain the request. They need not to escalate this request to the higher authorities and create the way out for you to make the filings. Means they have to active your database as for the purpose of e-filing. As we all are professional, we understand that there is on the portal itself, there is a database which talk about whether the company is active or not, whether active for e-filing or not. If it is inactive for e-filing, first it has to be made active for e-filing, then only you can do the filing, right? So for that, there is no electronic system even till date. You have to go and you have to raise the ticket through the ROC office, which will enable the portal to make the various filings, and then you will start the filing through INC 28, and then you will go to JLN2. But if the company is active, directors are very much there. They are signatories to the company. They are cooperating and everything. There is no such challenge. I do not find any reason why we should not use the electronic forms prescribed under the Companies Act and regulations made there under for the purpose of various filing. AOC 4 if can be signed by the directors, including XBR and ROM. Why we should not use that? It should be used. The IP job is to authorize them. Their power has been suspended, and if you empower them to make the various filing under your authority as an IRP, so I do not think that it would not be in compliance. It would be in more compliance to the Companies Act 2013. This is just in a way out. Wherever the portals and wherever you are not having the signatories, it is just giving a way out to you by which you can upload certain corporate action, but electronic database will never capture the corporate actions in the database of the MCA if we are not filing that through the prescribed e-form. Return has to be filed with the form, and the programming is like that. It cannot be an alternative to the programming and the architecture framework what has been prescribed by the MCA in the form of e-governance. That can only be updated or take on to record in the full compliance of the law if it is filed through the prescribed form itself. So we should try to the extent possible, directors are there, that under the authority of the insolvency professional, that all the necessary and prescribed forms are being filed in the manner the company has not been in the insolvency. It will be filed and master database will be automatically updated. Yes, I accept that there can be various corporate actions which has to be undertaken by the board and cannot be undertaken. So they need not to be filed. Then there is a section 28. Section 28 is a guiding principle for all of us, which will decide that so many corporate actions which are supposed to be taken by the board and the shareholders, including amendment in the memorandum, change in auditors, their terms, and so many other things as prescribed under section 28 has to be carried out with the approval of the COC only. So if those corporate actions are taking place with the due approval or cannot be undertaken, right, has to be accordingly filed in the JLN form 2. So I move further. Voluntary liquidation. In voluntary liquidation, there is a challenge. like an INC 28 to start with in CRP, we can file in INC 28 can only be filed in voluntary liquidation when we have an order of dissolution from the NCLT, right? It is only MGT 14 and GLN2 which is to be filed. MGT 14 within 7 days of passing the special resolution, and GLN2, the declaration of the solvency and appointment of the liquidator has to be filed. So with GLN2, again, I come back, as I told you in the earlier slide, GLN2 will facilitate and will give you the authority to make the certain filing. However, the database will not change. And what was that was a difficulty. We said that you have facilitated us through changes in the INC 28, enabling automatic shift and the changes on the MCA portal so far as the CRP and liquidation is concerned, because we have a court order, we have NCLT order in hand. What about this? The voluntary liquidation cases. In those cases, we do not have any order. So what they did, that nothing going, you send an email to the IBBI, let the IBBI send a request to ROC for raising the necessary request, and the ROC further has to take that request in their own domain and change on the portal. Yani intervention on the MCA portal in the database again is only possible when the regulators are specifically sending the intimation to the registrar of companies, yes, this company has gone into the voluntary liquidation, and after verification, then only the database will be disturbed. So this is a good thing also, that e-governance has taken care of all those aspects that manual intervention should be avoided or should be minimized to the extent. And this is something is to facilitate the implementation of the MCA 21 project. So now let us come to the various other compliances. When we are talking about that the insolvency professionals are under the obligations to comply with the laws which are applicable to the company, and today we are talking about Companies Act. So I am just taking few of the compliances which are supposed to be filed by every company, be it a private company or the public company. So general forms I have taken. There can be specific compliances which may not arise during the course of the CRP. But these compliances which are applicable, MSME form, we all know, it came out of the order of 2019, right, dated 22nd January 2019, that all companies whose payment to MSME suppliers exceed 45 days has to file this return by the, a 6 monthly basis for the April to September by the 31st of October and October to March by the 30th of April. So there can be two ways. There are two ways of interpretation. One, MSME you download, you fill in the data, attach it to the GLN2 and file it. Another way, if the company is live company, signatories are available, electronic form can be filed, then you use the facility of the MCN and file the MSME 1. So that would be better compliance and would give the effect on the MCA portal. It will reach to the database of the MCA. Similarly, DPT3. DPT3, yes, as I told you, GLN2 is an option, but the better option would be if the company is an active, again, you file it by the 30th of June every year. MGT 7 and MGT 8, the same 60 days from the date of AGM. When I'm talking about the MCA itself has hinted that you have to file MGT 7 and AOC 4. It means we have to hold the AGM also. So that we have to understand that during the CIRP, there will be annual general meeting. Equally, we will have the audit and auditors. There will be filing. There will be adoption of the account by the shareholder. And if there is any inability, then you accordingly has to report that there was no AGM or AGM could not take place or adoption could not take place. Then the other provisions of the Companies Act section 137 would come into picture. CSR2 is the equal, another compliance which we have to do. ADT1, we all, I'm talking to the fraternity of chartered accountants. So auditors, they have been filing at their own ADT1 within 15 days of the appointment in general meeting. Auditors, post auditors, CRA2, 30 days from the board meeting. The board meeting is not there. Then this is a question again. Then who will undertake? If there is no internal auditor, there is no post auditor, there is no secretarial auditor, there is no statutory auditor, who will undertake this activity? So to my understanding, subject to the provisions of section 28 of the Insolvency and Bankruptcy Code, which talk about that any change in the terms of auditors or appointment of auditors can be carried out with the approval of the COC. Insolvency professional is under the obligation to make the necessary appointment and file the necessary forms and return. Again, returns and forms can be filed in the prescribed form or as an attachment to the GLN2. So the compliance pertaining to audit I was just talking about, yes, section 17 also empowers IRP, then to 25 we go, we have to do it. That section 139, section 138, 148 and 204, four kind of the basic auditors, auditor, statutory auditor, internal auditor, cost auditor or secretarial auditor, as the case may be, and as may be applicable to the company, having regard to the, the threshold in which the company falls, has to be appointed and filed with the registrar of companies. Again, subject to section 28. So clarification regarding when I'm talking about voluntary liquidation, the another area of concern has been that you have to obtain the NDC from the income tax department. Thankfully, after a lot of representation and difficulties and time taken in the voluntary liquidation, the IBBI came out with this circular, IBBI LIQ 45/2021 last year. They come out with this circular that no such NDC is required under section 178, right, of the Income Tax Act. An insolvency professional handling voluntary liquidation is not required to seek any kind of the NOC or NDC from the income tax department. However, the practical size is different. When you go to the court and you say not required, they say, give me the affidavit, the tax has been paid, or seek the NOC, whatever may be. There is no provision that you seek the report from the registrar of companies, and they are seeking the report from the registrar of companies, and registrar of companies is raising the question that the company in the voluntary liquidation has not, held its AGM, has not filed the financial statement and balance sheet, are being filed frequently to the NCLT, and then you have to reply and respond that there is no financial statement, there is no applicability to section 137 of the Companies Act with the liquidation order in past, there is a receipts and payment, and so many things. That is a practical side of it. Now, a state may come to the SEBI laws, which are applicable to Companies Act. These are the little bit corporate actions which are regular in nature and has to be the, I have discussed what are the method, what are the, how the portal behaves, how you can go on the portal and do it. Where you have the signatories which are registered on the MCA portal in the architecture prescribed by MCA 21. Well and good. It is not, then you get registered yourself through MC 28. Act as a CEO, then you can upload various corporate action as may be available to you, taking care of the reasonable care and diligence through GLN 2 as an attachment. Now we come to the SEBI part, because as I, IBBI itself pointed out the compliances of the SEBI LODR. So I would be taking SEBI LODR regulations, which are primary regulations and obligations of an every listed entity, and then PIT, prohibition of insider trading regulation. These are also having certain contentious issues so far as the compliances are concerned. Fortunately, if we have a company which is under corporate insolvency resolution process or the liquidation process, and the shares are being traded, then the compliances become very, very important, because it has to be updated. Otherwise, there will be rigging in the prices and there can be other issues. And who is ultimately responsible after the commencement? In eyes of the regulator, it is the insolvency professionals. So for listed entities, debt, or it can be equity, both, SEBI LO shall be complied with by the resolution professional. And in case the compliances are not practically possible, there are the email IDs, you can mail them. But nowadays, even the compliances, the framework of the listed entities is also through the digitized mode. There are complete digital compliance mechanism which has been prescribed by the stock exchanges to do the compliances. We'll look into that in the next slides. Let me take you through certain compliances, because circular talk about all kind of the compliances unless until specifically exempted. So there is no exemption which has been given by anybody, except some additions has been made. After 2018 itself, the NSE came out with the amendment in the LODR, and recently last year also, they come out with a different kind of the framework. Recently, again, they have changed the LODR, keeping into the mind of various changes in insolvency and bankruptcy code and challenges coming to regulate the affairs, right, and to protect the interest of the investors. So primarily, there are certain compliances which has to be carried out by every listed company, and to so far as practically possible and can be complied with, has to be complied with by the insolvency professional also. Like 7.3, submission of the compliance certificate from RTA in relation to maintenance of the share transfer facility to the stock exchange within 30 days from the end of the financial year. 33, statement of the investor complaint. That is a comparison, how many complaint you had at the beginning of the quarter, how many you resolved, how many are balanced, and that is a regular feature which has to be uploaded within 20 days from the end of the every quarter, because objectivity of the SEBI's primary is to protect the interest of the investors. So there should not be any complaint. There has to be a complete mechanism within the company to resolve the complaints of the investor. Again, it's a very, very difficult situation when the company is under the CIRP, know how to resolve those complaints because so many issues are there. But yes, we have to obtain a report from the RTAs and file it. Related party disclosures has been a matter of concern. As we know, Section 28 again regulate the related party transactions. And again, Regulation 23 also talk about related party transactions, certain additional requirement to be complied with. We talk about audit committees, talk about the risk compliance, but those are not applicable. They are not applicable because board is not there, the committees are not there. Then who will take care that how the compliances to the transaction carried out with the related parties has been taken care? Here is the part comes the related party disclosures. That remains. So Section 28 takes care of the other related party transactions, but here it talk about disclosures. So within 15 days from the date of the publication of the financial statement, as we all know, we have to publish the financial statement on every 6 monthly basis within 15 days from the publication. So practically, if you talk about the March ending, publications has to take place within what time? Financial statement, first of all, has to be published and then it is filed. 45 days time we have, then we have the 15 days to file it, practically 60 days to file it. But if the publication is taking place in 30 days, then it will become 45 days in which we have to file related party transaction. Remember, last year it was 30 days, it has been made 15 days recently. Secretarial compliance report, similarly, we have to file within 60 days from the close of the financial year. Shareholding pattern is a regular feature and we have to file on a regular basis on end of the every quarter, 21 days, we have to update. The trading are taking place or the shareholding patterns are changing, right? We have to update that. Submission of the financial statements unaudited with the LRR, 45 days from the end of the quarter, 60 days from the end of the quarter, we have to file audited one for the listed companies. So I do not know how many listed companies would be able to close the financial statement with the closure of the financial year and to get it audited, but this is a requirement. If there is a practical difficulty, it has to be intimated to the stock exchange. These are the challenges and these compliances in terms of regulation cannot be complied with. As you know, the framework of the LODR specifically talk about there is a non-compliance, there is a penalty, and immediately start chasing you. Why this compliance report has not came to what? You will immediately get that, moment you registered yourself, you will start getting a lot of emails from the stock exchanges. Then you have to equally respond there. And compliance to the extent possible has to be filed through the digital platforms prescribed by the stock exchange. Annual report. 40 compliance certificate from practicing company secretary. Practically it is redundant, no, because hardly there is a transfer of shares in the physical mode and all. Maintenance of the functional website is another requirement that you have to keep as a listed entity. Your website is a functional website to update the various corporate actions and the changes which are taking place. Obviously, changes relating to the KMPs and other are subject to Section 28, cannot be there. But yes, you have to keep to that extent the functional website. Reasonable care and diligence you have to carry it out. Everything is not possible. That is for sure. So publications, financial results within 48 hours. If you are doing it regular basis, financial statement, you have to publish. Regulation 30 is the most crucial regulation when we talk about the compliance is envisaged under the LODR framework. This is the most crucial regulation which talk about event which are supposed to be reported to the stock exchange within 24 hours. These are the crucial, I'm saying, because it has the effect on the prices of the scripts if they are traded. So there is a complete schedule which talk about what kind of information you need to report. So event is specified in para A of part A to the schedule 3rd are deemed to be material event. These are the material event they have identified which is to be disclosed and reported to the stock exchange within the time frame prescribed in the regulations. And regulation para B part A material guidelines they have prescribed that what will be the guidelines you will follow. So as I'm talking about the time frame 24 hours, LODR talk about board meeting. They have also not updated their software that how the IRP there is no, yes, there is no board meeting, but there can be sub event. If there is some event subject to the Insolvency and Bankruptcy Code, it has to be reported by the insolvency professional within a period of 24 hours. Like there can be change in the KMP, CFO, CO or somebody, obviously with the approval of the COC. In resignation of auditors, again a very crucial issue. If the auditors has resigned, right, then along with the reason he has to file that auditor has resigned, there had been some sort of the one-time settlement with the banks, or we have issued some notices or something to the shareholders, like for the annual general meeting, we have to 24 hours, we have to report it. Certain event-based disclosure by the company under the CRP. This is the new thought of the the market regulators, and they came out with a specific circular to that extent. They have also incorporated the necessary changes in their electronic platform for filing various compliances. And when they seen it and the various circulars, given effect to these compliances. So event-based compliances are disclosures under the CRP, like resolution plan or restructuring, if there is any filing of an application by corporate person for initiating of CRP. So they are conscious moment you are going for section 10 or section 7 application, immediately it has to be reported to the stock exchanges under the head, right, company under insolvency process, not resolution process has started. And after admission also they have given certain, the parameters on which the filing has to be compulsorily done. That is public announcement made pursuant to the order passed by the tribunal under section 13 of the Insolvency and Bankruptcy Code. List of the creditors as may be updated from time to time. Appointment, replacement of the resolution professionals, right? Prior or post intimation, as we have the board meeting, intimation pre and post board meetings, the similar lines they have prescribed pre and post intimation of the meeting of the committee of the creditors. Brief particulars of the invitation of the resolution plan. Mind resolution plan and activities relating thereto are confidential. Even the regulator has recognized in their circular these has to be kept confidential. But certain details relating to, just to update the market, just to update the investor who have invested their funds in the company, particularly the shareholders, are aware that what is happening in the company. There is some RFRP, there is some resolution plan, and what kind of resolution plan is coming. When the resolution plan is going to be, tabled before the NCLT, when it has been approved, what are the various, who are the, the investor, who is the successful resolution applicant or potential resolution applicant. How after the resolution plan has been approved, even this continued like that, how the MPS, yani master production schedule is being changing, how they are acquiring and achieving the targets prescribed therein. These kind of features they have incorporated in the schedule to the disclosure of insolvent company under the insolvency process. We will see that in the electronic form also, how it is working. For that listed entities, intimation to the stock exchange, again, the material event has to be disclosed in terms of the regulation 51 read with the schedule 30. And the regulation 30, as I told you, the most crucial and important regulation so far as the LODR is concerned, making disclosure to the particular events and corporate actions within the time frame, which are crucial. Is mutus mutandis apply in case of the debt listing securities also. So it will be equally taken care. 52, 53 and 54, submission of the financial statement, as we have seen in equity segment, within 45 from the end of the quarter, within 60 days from the end of the quarter. For the last quarter, we have to do the filing, and maintenance of the functional website again is the equal requirement. You have to keep your website functional and updated with the latest changes. Now let us come to the certain circular which has been issued by the regulators. As I told you, circulars having more bearing on the compliances. There is no much change in the substantive law. It is through the regulations it is coming, or it is coming in the forms of the circular to facilitate how to do the compliances. So NSC came out from time to time. They have been very, very proactive. MCA came in 2020, but NSC itself came in May 2018 itself. After the IBBI came out with the circular of the compliances, they came out with their framework how you will do it. And thereafter they made twice the changes in the LODR regulations. The following disclosure shall also be submitted to the stock exchange in addition to what is prescribed in the LODR. So as I told you, there is no exemption as such, unless until there is a difficulty which you can inform you through the email or otherwise. There is no exemption as such. However, in addition thereto, you have to give the prior intimation of at least 2 working days about the date of hearing where the NCLT would be considering the resolution plan. So after the company has gone to the CRP, the eyes are just looking on the portal that when resolution plan is coming and when NCLT is going to consider. Why? Because they want to know what would be the disclosure, what would be the adverse impact of resolution plan on the investors, right? So disclosure of approval and resolution plan also has to be made to the stock exchanges. On oral pronouncement itself, right, has been approved, right? They have taken care, don't wait for the order, you please make it has been approved. Otherwise, of the order on immediate better, but not less than 30 minutes. Look at the speed, they say within 30 minutes you have to do it. Resolution professional shall inform the exchange platform any impact on the existing holder. This is the analysis they are asking from the resolution professional. This is a very, very critical task which you have to report. How the resolution plan which has been placed and approved by the NCLT is going to have the impact on the investors. What would be the status of the company after this? Whether in terms of the resolution plan, the company would be continued to as a listed entity or they are seeking delisting, right? So value of the holding of existing shares, whether they are going to be written off, cancellation, extinguishment of existing shares, preference share, debenture without payment, and what are the terms? Brief you have to submit to the stock exchanges. Sir, I'm going a little fast because I know this is 1 hour session only, and I have to take some questions also. So the company's resolution professionals are equally advised to be guided by the LODR provisions which are coming, and you have to analyze those provisions to look into the corporate action which you need to file with the stock exchange in terms of the circular issued by IBBI, read with the NSC. Now I'm taking you through the framework. As we have discussed the framework, digital platform, the MCA works. They also have their digital exchange through which the informations are submitted to the stock exchange and which goes to the market. So with the commencement of the CIRP, you will register yourself. NSC or BSC, they have absolutely the same features, same kind of the structure, and even the circular comes mostly on the same date, right? So with the intimation of the commencement of the CIRP, they have prescribed STP digital exchange.nsc.india. In the compliance portal, when you will go log in, there will be compliance side, you will open CIRP and you will find that you have to file through that mode. Resolution, approval of the resolution plan or withdrawal of resolution plan as the case may be, including resolution plan or restructuring in relation to the loan or borrowing with the bank, financial institutions, if there is any intimation, that has to be supplied through this digital platform only. And how to do it? I have just taken NSC, BSC is the same. You have to get yourself registered. The moment you send them the intimation that I am RP or the liquidator, they will register yourself on the portal and will give the link to you. Then you can enter into the system. Then you are authorized. Password, it will be again with the liquidator or resolution professional. Then you will go to the compliance portion on the site and you will find like this: corporate insolvency resolution process. You will find, and there are the draw box again. As I told you in the MCA, similar line pe they have corporate insolvency resolution process on the compliance side. Then you have to select the description of the announcement. What kind of announcement or corporate action you are having, you have to select that. As I just explained those actions in the last slide, these are the actions which have been identified by those companies. These are the actions particularly. These are the actions which are enlisted over there. You have to select and accordingly file that in the electronic form. And this type of the pronouncement, you will go to the drop down list and file it. So with this, the last portion which remains to be very, very important and to the LODR compliance is relating to the PIT. How the PIT, if the shares are being traded, the market is taking place, and we are fortunate enough that the companies under CRP and trading is taking place, we have to be equally concerned about the insider trading regulations. These are very, very serious regulations and very heavy penalties are being imposed. And as I told you, the penalties and the costs are being imposed. They will not be form part of the CRP cost, and it will become the responsibility of the insolvency professional. I don't know how to undertake that. But yes, reasonable care and diligence has to be carried out, and we should try our level best to work within the framework which has been prescribed by the regulator, or to create our own framework in a way that we can comply with the law. And how to do it? What the connected person PIT talk about, that any person who has been associated with the company all right, even during the last 6 months. So these regulations even continue to the insolvency professionals and their team members who have been access to the confidential information, including their professional advisors and other persons who have been associated with the resolution plan. They all fall within the domain of connected persons. So whatever may be the compliances which are applicable to the connected person indirectly also become applicable to the insolvency professionals, his team, or the professionals appointed by him in this process, and they are equally bound to do it. And to just capture this and to digitize this, have to have a surveillance on this system. What they have done, they have come out with another idea. They says no interest shall communicate, provide, or allow access to any unpublished price sensitive information relating to the company or securities listed or proposed to be listed to any person, including others, except where such communication is furtherance of legitimacy purpose, like NCLT, that would be fine. So with the PIT regulations coming into
real estate and NAM, NAM estate, उसका चंदी बेंच में है
क्या है मर्ज हो रहा है
amalgamation के लिए
sorry I think
रियल एस्टेट
उसका
नेट पे सर्च करो डेटा
organizers have to see that there is some, I think yeah, thank you. So as per regulation 5 of the PIT regulation, connected persons, the board of directors or head of the organization, so we are not board of director but head of the organization, every person required to handle unpublished price sensitive information. Then what to do now? Look at this, ensure that the structured digital database is maintained. ये जो structured digital database आया, this is a database which is capturing even the PAN numbers of the connected persons. And automatically, if you directly or indirectly doing any kind of the trading or anything which is called as insider, based on the insider information, you will be in trouble or we will be in trouble. The SEBI accordingly advise that you have to take care of that thing also. And the PIT regulations, they have given these responsibilities to digitize most to the NSDL and CDS. They say the RP and his team required to register, right? WhatsApp with the depository participants for system driven disclosures. So these disclosures earlier were difficult to be captured. Now what they have done, the people who are connected, you have to identify and place them into a database which will be maintained by the NSDL and CDSL, who will have an automatic checks and balances on your functions and your, the dealing in the capital market. So automation of the continual disclosure under the regulation has also been done, and we have to update that, and we have to incorporate the information in that database also. So therefore, clarified that for listed companies who have complied with the requirement of the circular dated September 9, which talking about this system driven disclosures, the manual filing disclosures, so 7.2 were prescribed are not applicable. So this is another area of concern which we have to see. With this, thank you very much. I know we have certain time for the question answers. Now I stop my PPT and we can have questions wherever.
Vinny ji, may I come in?
Yes, sir, please.
So I am Rajan Agarwalia. So my question is, so I am an RP in one of the small listed companies at Bombay Stock Exchange.
Sir.
So the auditor has not been paid for the last 3 years. The auditor refused to do work without being paid current year's fees. The auditor wanted a very high amount of fees. The COC has refused change of auditor. The COC has refused to pay the fees of the auditor. Now, how do I get the audit done and how do I do the procedures?
Absolutely right, sir. You have taken the reasonable care and diligence. You have tried the CSC approve the fees, or the terms and conditions or appointment are changed, or the auditor is changed, which has not been done. So this is section 28 which has to deal with. You cannot deal with that, sir. If he is not even resigning, would have been resigning, you would have taken it a different way. You have no other choice except to intimate to stock exchange. Within these challenges, I am not able to get the financial statement audited from the auditors. I am not saying that it is an essential services to be supplied by the auditor that you can look into, and you can go to the court and ask that service should be supplied, irrespective of the fact the payment for the earlier services has not been made. But he will be made the payment in priority so far as the CRP cost is concerned. So I do not understand why the auditor is not doing when his fees is duly protected under the Insolvency and Bankruptcy Code, because CRP cost is a priority cost. His fees for the current year is a CRP cost. For the earlier fees, he has to file the claim like any other claimant, and he has to do it. But you can intimate to stock exchange, it will not be taken as a non-compliance on your head. Fairly, you have to report.
Thank you, sir.
Next. So this is a difficulty. Hardly there are the companies who trading at who the scripts are trading, but there are so many compliances which are practically not possible. But we need to keep stock exchange updated, possibly through the digital platform, or not going through the digital platform. It is not happening. At least writing emails to the listing compliance department that this is a scenario. In terms of this regulation, this is my inability to comply with this regulation within this context.
Sir, one further follow-on question is that now the on the BSE website, it shows that the company has been suspended because of IBC. So how can trading take place?
This is wrong, sir. Maybe because IBC, they should not suspend the company as such. But the company may have been suspended because the company has not paid the fees. And even in that situations, and you can request them, if you want, you have the the shareholders who are trading in their scripts. This cannot be a reason. IBC is not a reason, sir. That is, the platform has been prescribed. The fees can be an issue. Sir. Sir, anything on practical side, how to file the file under the Companies Act? I think I made the point, circular talking about that you go through the JLN2. But so long you are having the facility, you can do it through the prescribed form. And similarly, with the stock exchanges, sir, get yourself registered and do all kind of the compliances, whatever is possible, or report it through the email, the another way, which they have not written, but it has to be done.
Sir, good evening. Can you throw some light on compliances post approval of a resolution plan?
Yeah.
Because there are certain compliances after approval of resolution plans,
right.
So far as MCA is concerned and other departments are concerned.
Sir, two things. What is the role of the IRP and what is the role of resolution applicant? Once the resolution plan is approved, practically there is no resolution professional, moratorium is gone, and you have to do all kind of the compliances, update the database of the regulator, MC and everything. Here is the question comes, if you have made various filing through JLN2, the database is not updated. Then the ROC would ask that you need to file all kind of the returns document of the past period using the prescribed e-forms, unless until you have sought the specific concession and relief from the NCLT and which has been given. Again, if there is additional fees, nobody can help you out because system is system. It will not understand whether you are under the CRP, and additional fees will not be payable by you. So the thing is that if you are supposed to do the compliances and RP and IRP, like I just mentioned, when the resolution plan is placed and approved, you have to intimate to the stock exchange and resolution professional that what would be the impact of the resolution plan on the investors, particularly equity shareholders or the debenture holders who are listed. What would be the impact? That is a compliance post to the approval of the resolution plan or at the time of the resolution plan is being placed. But thereafter, the company has to again file INC 28 and it will come back. As I shown you, the drop box is there that the resolution plan has been approved. The line, the corporate action line which was created in the database of the CRP will go away. You will become a normal company, compliant company. If you are not a compliant company, then you have to file your DR12. DR12 equally has been, programming has been changed. I have been the part of various implementation. Initially, it was very, very difficult to file the DR12 for the new directors, but now what is happening, sir? The DR12 has been captured, rules have been amended. We also made a lot of representation. Then it came out, no, your DR12 can be filed by the new resolution applicant. Subject to you have one person on the portal who can facilitate the filing. In a scenario, the portal is completely shut down. There is nobody on the portal. Company is inactive. You have to go back to the ROC, create the through the CR of the database one director, and then do the filings.
Sir, in case there are suspended directors who are still on board, they have to be removed and the new directors from the RA has to be appointed.
Absolutely.
And the suspended directors are not cooperating. In that case, the only way left is to go to the ROC and request them to, induct the...
Absolutely. That is the scenario I was talking about. Resolution plan will deal how the existing directors will get terminated, because they have been just suspended. The power has been suspended. Directors are very well there. So maybe resolution plan would definitely prescribe that with effect from the date of approval of the resolution plan, the existing director shall cease to be director without any further act, deed and things, or shall be deemed to have been resigned. Now what will happen? The new director, they will also give the name of the new director who will come on the board. What you need to do, if the company in database, there is one CFO or company secretary. CFO or company secretary can file DIR 12, sir, for effecting the necessary change on the portal. Like you can file for the appointment and cessation of the existing directors. If you do not find anyone out of the authorized person list, as I told you, there is an architecture of the MCA working. There has to be somebody connected. Then what you will do, sir, you will go to the ROC, then you will create one director on the board giving the resolution plan copy, and he will do the necessary compliances. So ROC from the backend will change the database. Even we are asking then resolution professional should be empowered. The difficulty only is the law, sir. Law with the approval of the resolution plan, insolvency professional also lost his status from the insolvency resolution professional to a normal insolvency professional. He is while resolution professional then. So if they continued with that fundamental of CEO, then he can upload the document.
Thank you, sir.
Sure. Any other questions, sir? I think I was a bit fast because I have to cover so many things in 1 hour time. But yes.
Vinitji, will you be sharing the PPT, sir?
Yeah, I will be sharing, sir. I will share it. On the
Request to the organizers to share the PPT. We can give our email IDs in the chat box.
Yes. I will share. No other question? I think compliance, everybody is expert. So everybody know how to do the compliance is not a typical topic. Even if it is also evolving, sir, you never know how to do it. Loya ji?
Yes, Vinitji, I'm here. I'm here, Vinitji. Thank you so much for your deliberation. And even though compliance, we are all compliance professionals, but then compliance from the point of view of being an RP for a company where there is no support, there is no cooperation, and for a company which is again listed. So I feel the RP is probably walking on a minefield, and a mine can blast anytime. So we must all be very, very careful. And we are doing our job as a trustee of the company. So all necessary precautions, all necessary steps should be taken so that all compliances are done.
Sir, I'm having a query. Can I ask?
Yes,
please.
Sir, suppose if a company has not paid listing fees for past 3 or 4 years, in that case, the RP is not able to do compliance for the current period, because unless and until we pay the last pending listing fees to NSE and BSE, they will not allow any disclosure. So what should RP do in this case?
RP has to write an email that so far as your previous fees are concerned, it's a matter of the claim. You please file your claim and activate the portal, enabling me to do the necessary compliances. In case you are not doing, I will be sending emails to you for the various corporate actions.
So there is some practical problem. Actually, NSE, BSE, like they don't understand the concept of IBC. So we have faced these issues in many of the cases.
No, they understand very well. See, even NSC, very senior officials, is a part of my another committee. I'm the chairman of that committee. And we used to discuss about this standard. They understand very well. This is a matter of they are actually commercial thing. That listing fees, they don't want to compromise. And there has been orders also. They have also moved to the NCLT in few of the cases that our fees should be taken as a statutory fees and should be paid in priority.
Okay.
Right. So it's a matter of the fees and principle that if the fees has not been paid, the trading would be suspended. You will not be allowed to do the compliances. But it is us. We have taken the reasonable care and diligence. So you please take reasonable care. If they are not aligned, tell them, write the detailed email, please let me do the compliances. Otherwise, whatever may be the corporate action come to my knowledge in this company, within the framework of the LODR or any other regulations under SEBI, I will be intimating you through the email. Simple.
Okay, thank you, sir. Thank you.
So thank you again, Vinitji. And I'd like to present an e-memento to you. So I'll request all the participants to kindly join me in presenting this e-memento to Vineet ji, and kindly follow it with a round of applause, please.
Thank you so much to organizers. Thank you, Arunji and other organizers, Sumitji and other invited AACAE, Kolkata. It is indeed my pleasure to be amongst the elite professionals who are all knowledgeable. Thank you very much. Look forward. Thank you.
Thank you, Vineet ji, and I hope
Best
you'll
wishes
come
to
back
the
again
Conclave.
on our future invitations. Thank you so much.
Sure, sir. Anytime. Thank you very much. Good be my pleasure.
Now I'll request Shivank to introduce our third speaker, Mr. Harsh Garodia. Shivank, are you there? I can see.
Yes, sir, I'm here.
Yes, please do the needful, Shivank.
Good evening, everyone, once again. So we have our third speaker for the evening, CA Harsh Garodia. He's a graduate in commerce from St. Xavier's College. He's also a fellow member of the Institute of Chartered Accountants of India. Harsh is a registered GST faculty under ICAI. His expertise is in the field of indirect taxation and handles matters in relation to GST, central excise, service tax, VAT, and foreign trade policies for the past 10 years. Harsh has been providing professional assistance to various corporates in the areas of indirect tax. He has represented various public limited companies, public and private sector units before tax authorities up to SESTAT level. He has a vast ranging experience from show cause notice replies, appeal, representation, tax planning, and devising organograms for companies. He's also a regular faculty at various professional forums at ICI, Merchant Chamber, Bengal Chamber of Commerce, various study circles like DTPA Views Exchange, and providing in-house training to various corporate houses. We welcome you so much, sir.
Good evening, all the organizers and all the professional colleagues who are present right now in the seminar. And thank you, Shivam, for the introduction. So today the topic that has been allotted to me is the implication of the indirect tax on liquidation process and the CRP process. Since we don't have much time left, I will try to cover the issues as much as possible. So I would be, my slides are visible to you?
No, not yet.
Not
yet. You are the co-host, so you can share the screen.
Just a minute. Just share. It's now visible?
No, not yet. Yes, something's coming now. Yes, now it's visible.
So the today topic for me is the implication of the indirect tax laws on CRP and the liquidation process. Here, sir, I'm going to cover two important aspects that have been receiving a lot of queries from. The first aspect is regard to when the CRP process are being initiated, what are the compliances that RP and IRP is required to be complied. And the second part, I'm going to discuss about what are the GST implications on the sale of liquidation state. Liquidation state is basically the assets of the corporate debtor. So whenever we are selling the assets of the corporate debtor under liquidation process, what are the GST implications on it? So we are going to cover these two aspects. As we know that GST and IBC has been introduced almost at the same time. So there are certain processes under GST which has not been aligned with the IBC, which has created a lot of hurdles for the IRP and RP when the CRP process has been initiated. So how the CRP process have been initiated? Whenever there is a default by the corporate debtor, the financial creditors and the operational creditors can file the application before the NCLT, and when the NCLT admits the application, the CRP process has been initiated. So here we have to make a distinction. The first is during the CRP period and prior to CRP period. Now, whatever are the dues prior to CRP period, financial creditor dues or operational creditors due, or there is any dues which has not been paid under any law, that is GST or income tax, that has to be claimed by the financial operator or financial creditor and operational creditor by submitting an application or filing the claim from before the RP. IRP and RP duty starts when the CRP process are being initiated. As per Section 18 and Section 25 of the IBC Act, IRP and RP has a responsibility for managing day-to-day affairs of the business as a going concern. Please remember the CRP process, the RP, in the CRP process, the operators are being managed as a going concern. And RP and IRP was also responsible for doing all the statutory compliances that's required to be complied by the corporate debtors under GST law, under PF, under income tax, whatever the allied laws are there that needs to be complied. Now question arises, what are the hurdles that have been faced by the IRP and the IRP when the CRP process has been initiated? So as we all know that CRP process are being initiated only when the defaults are being done by the corporator, that is corporators are in the bad situation to make the payments. So whenever the process, CRP process are initiated, the RP usually finds out that the GST returns are not been filed, GST payments has not been done, or they have not filed the return for last 6 months, which has resulted into cancellation of the GST registration certificate. But as per the law under IBC, IRP and RP is required to do the compliances, all the compliances under the GST also. So once the RP start initiating the process, start managing the process. For example, on 1st June 2022, the CRP process has been initiated. So for the month of June, the return under GST is to be filed in the month of July. Now, RP has found out that for the previous month, that is April and May, the return has not been filed. So under Rule 59(6) of the CGST rules, if you don't file the previous month return, you cannot file the current month return also. Now, as a result of this particular rule, RP and IRP has not been able to file the GST return for the month of June, which falls under the purview of CRP. They are not able to make the payment under GST. So a lot of hurdles has been created like this. So what move they have done, RP and IRP, they started filing returns and making the deposit manually to the department. But department was not accepting it because everything has been done electronically. So they filed the writ petition before various high courts, and a lot of pronouncement has been done in this regard, which says that which has been instructed to the GST department that in such a scenario, the GST department is going to accept the manual GST returns. Now, to overcome these hurdles, this has been continued till 2020. That I would say the first quarter of the 2020. In order to overcome all these hurdles, they have issued a notification number 11/2020, notification number 39/2020, and the circular 134. This notification has been issued with regard to the process that needs to be done when the CRP has been initiated. So the first thing is GST registration. Now, as I have said that prior to CRP period, either return has not been filed or the GST registration number has been cancelled. In such a scenario, the RP is not in the position to file the return under the erstwhile registration number. So through this notification, department has told the RP that you are required to take a new registration under GST within 30 days from the date of appointment of RP and RP. So suppose that on 1st June, the CRP process has been initiated and the corporate debtor has not filed the previous month's return. In such a case, the RP is required to take a new GST registration number within 30 days from the date of appointment of RP. Now, they have added a proviso in the notification which says that if the corporate debtor has already filed all the returns, that is GSTR 1 and GSTR 3B of the previous months, in such a scenario, the RP is not required to take a new GST registration number. RP is not required to take a new registration, new GST registration number. That means whatever the old registration number that is being carried by the corporate debtor, the same number can be continued by the IRP or RP. Now suppose that they have not filed the return. The new law. Organizer, can you please take care of this? Lot of noise is coming. Now suppose that the previous month return has not been filed, and as per the notification number 11/2020, ended by notification 39/2020, the RP is required to take a new registration. The question arises where they have to take a registration. In every state, whether they are required to take a registration, or in one particular state they are required to take a registration. So they have mentioned. So in this case, yes, the is having a registration in if the corporate data is having organizer, can you take care of it? The lot of noise is coming from the background.
Organizers may kindly mute all others. Kindly mute all others. Organizers may kindly expel the concerned participant.
Yes. So you have to be clear. So for example, prior to CRP period, the corporate is having a registration in West Bengal and is also having a registration number in Maharashtra. In such a scenario, when the CRP process are being initiated, the RP is required to take the registration in both the states. So ये सब clear हो गया कि CRP process जैसे initiate होगा, वैसे ही RP को within 30 days from the date of initiation of CRP एक नया registration GST का लेना पड़ेगा वो सारे states में जहां already GST number exist करता था. Is there any doubt about this? Now question rises, sir, कि अगर एक state में corporate data दो business carry on कर रहे हैं, for example insurance business and a manufacturing unit, and for both the different business vertical they have taken a GST registration number. So whether the RP can take a single registration number and do all the work, or they have to take RP required to take a registration of both the GST number. So there is no clarification from the CBIC side as of now. So it is advisable that whatever the GST, wherever the corporate data is having a GST number, RP should take a new GST registration number here. Now, there is a circular which has been issued which says that whether the GST department can cancel the GST registration number, old GST registration number that has been carried out by the corporate data. The answer is no. They say that they cannot cancel the GST registration number. However, they can suspend it. In case they have already cancelled the GST registration number, it is advisable to revoke the same if it's within the revocation period, that is 30 days. Now we are coming to the returns. For example,
Can I ask a question here?
please.
So if RP or IRP has taken a new number, new registration number, and it's being allotted to them, what happens after the plan is approved? Will that number be surrendered, or that number will continue with the RA?
No, that number can be continued with the RA. If it is since CRP process is a going concern and the resolution that business is going to continue in the foreseeable future also, that new number that has been taken by the RP, the same number can be continued. And also you have to understand another point here is there is two processes. One is CRP process and one is liquidation process. If you look at the notification number 11/2020, where they have suggested that you have to take a new registration number, but for the liquidation, this process has been suggested only for the CRP and not for the liquidation. So suppose that if the resolution plan has not been approved by so the companies go into the liquidation. In such a scenario, also the number that has been taken by the RP can be continued in the liquidation proceeding. Now, if the liquidator has sold the corporate debtor as a going concern, then same number can be continued by the acquirer. It's clear, sir?
Thank you, sir.
Now coming to the returns. For example, the CRP process has been initiated on 1st June 2022. The RP is required to take a GST registration number within 30 days. So he applied for the GST number on 6th June 2022. And the registration number has been allotted on 28 June 2022. So RP is required to take a GST number from 1st June itself. They have applied within 30 days, that is on 6th June. And the return and the registration has been granted, as the registration certificate has been received on 28 June. So question arises here, for the period between 1st June to 28 June, all the inward supplies and outward supplies going to continue, the process, the business not going to stop. For such thing, for this particular 1st June to 28 June, all the data, that is inward supplies and outward supplies, has to be filed in the first return that is being envisaged under section 40 of the CGST Act. However, I would like to state that GST department has introduced first return under section 40, but there is no format of the first return. So from 1st June to 28 June, whatever the transaction that has been executed by the corporate debtor, that needs to be present in the GSTR 3B, that the first GSTR 3B that you have filed. For the month of June, the first GSTR 3B has been filed by 28 July of 2022. All this 20 days transaction has to be there in the GSTR 3B. So there is no separate format for the first return. Clear, sir? Now moving with the input tax credit. This is most important part of it. सर मैंने अभी आपको बोला कि 1 जून से लेके 20 जून तक जो भी ट्रांजैक्शन हो रहे हैं वो तो ओल्ड जीएसटी रजिस्ट्रेशन नंबर पे हो रहे हैं, क्योंकि यू हैव गॉट द न्यू जीएसटी रजिस्ट्रेशन नंबर ऑन 28 जून, राइट? बाय सो you know how whenever ITC has to be claimed, there are certain conditions that needs to be complied. One of the rule is 36(4), which says that कि अगर मैं कोई भी परचेज और एक्सपेंस करता हूँ और मैं उसका ITC क्लेम करना चाहता हूँ, that ITC has, that transaction has to be reflected in my GSTR 2B as per rule 36(4). अब सर मेरे पास तो नया रजिस्ट्रेशन नंबर आया है, पुराना रजिस्ट्रेशन नंबर तो मेरा खत्म हो गया, और जो 1 तारीख से 20 तारीख तक जो ट्रांजैक्शन हुई थी मेरी, वो रजिस्ट्रेशन, वो तो पॉइंट रजिस्ट्रेशन नंबर पे रिफ्लेक्ट होगा. तो कैन आई क्लेम द क्रेडिट ऑफ ITC? द आंसर इज यस. They have carved out the exception to rule 36(4). So in such a scenario, all the purchases and expense that has been done between this 20 period in 1st June to 28 June, and where the invoices has been received under the old registration number, even if they are not reflecting in GSTR 2B, still you can claim the credit because of the exception that has been given in notification. Now, sir, this notification has been introduced in the financial year 2020. From 1st January 2022, a condition has been envisaged in section 16, subsection 2, clause AA, which says that if the credit are being if the GSTs are being reflected in your statement in GSTR 2A, then you can claim the credit of it. So when this notification has been introduced, section 16 2AA was not there, but right now it is there. It has been introduced from 1st January 2022. However, there is no changes has been made in this particular notification. So we are still waiting for this particular thing. Second, this exception, that is 36(4), that even if it is not reflected in GSTR 2B, the RP can claim the ITC of it. It is only applicable for the first return, that is the first monthly return that you are going to file. So for example, you are going to file the return of June in the month of July. In July, you have not claimed the credit of the first 20 days. Then it's going to be difficult for the RP to claim the same. Similarly, sir, if the corporate debtor is going to make the supply from between 1st June to 28th June, in such a case, they are going to make the supply under the old GST number, which they are not going to file the return. Whether in such a scenario, the person who is receiving such goods or services from the corporate debtor, whether he can claim the credit of it because the transaction is not going to reflect in the GSTR 2B of the recipient. Again, the exception has been carved out, which says under that rule 36(4) will not be applicable for the recipient. But there is a concept called revised invoice, which has been enumerated in section 33, subsection 3, clause A, which says that if the registration has been obtained within 30 days from the date of liable to take the registration, in such a scenario, you can issue the revised invoices against the invoices which has been issued using the old GST number. So RP can still issue the revised invoices against all the invoices which has been issued within 20 days, so that the revised invoices can be reflected in GSTR 1 of the first month, that is June. So clear? Now we are going with the electronic cash ledger. We have found certain circumstances where RP by mistake has made the payment of the GST, that is, has made the payment to the in the GST.
Can I ask something?
Yes.
Whatever circular or notification you are referring to, those are not reflected in your PPT, I think.
No, I have reflected in the introduction part.
Okay, so that's there, no?
Yeah. So where am I? Electronic cash ledger. Now, sir, we have find the instances where IRP or RP not aware of the GST law. When the CRP process initiated, they have made the payment of the GST in the electronic cash ledger of the old GST using old GST number. That is, the balance is still lying in the electronic cash ledger. In such a scenario, the notification has been issued which says that the RP can apply for the refund of that electronic cash ledger. They have to take a new registration number and make the payment. For this, there is no limitation period is also applicable, because what you are claiming the refund is of the it's a cash that is lying in the electronic cash ledger. So these 3 points, that is registration, return, and in case the amount has been deposited in the electronic cash ledger, these 3 points have been clarified through this notification and circulars. So is there any other issue you have faced when the CRP process have been initiated? Any doubt about this?
Harsh, I have a question. So suppose during the CRP period, some old invoices have got paid in the old registration, and the RP has not taken a new registration as yet, because payments need to be made on a daily basis. So some invoices have got paid in the old registration, even after initiation of CRP. So will that input credit be transferred to the new registration which the RP takes. Is that possible?
Yes, sir. That's why I told in the input tax credit that there is exceptions that has been carved out. Which says that even it is not reflected in the GSTR 2B of the new GST registration registration number, still RP can claim the credit of it, but that credit has to be claimed in the first return only.
Okay.
So GST का ITC claim करने का कुछ condition है which has been enumerated in section 16 and rule 36(4) has to be applied कि मैं ITC तभी claim कर सकता हूँ जब मेरे GSTR 2B में reflect करेगा. ओल्ड जीएसटी नंबर पे तो मेरे 2B में रिफ्लेक्ट करने वाला नहीं है. तो इस डिफिकल्टी को हटाने के लिए उन्होंने बोला कि भाई ठीक है 30 अगर तुम्हारे जीएसटी 2B में रिफ्लेक्ट नहीं भी कर रहा है तभी तुम क्रेडिट क्लेम कर सकता है. तो इट इज वेरी क्लियर नाउ.
Okay, that's good. That helps. Thank you.
Any other issue with regard to the process, because then we are going to move forward with the sale of liquidity.
Is it compulsory to take a GST registration even if company is closed?
Sorry?
Company is not working. There are no transactions. Is it compulsory to take GST number?
Absolutely.
New number?
Absolutely, because CRP process being introduced with the intent to revive the industry, to run the industry as a going concern. So there has to be certain transactions. Now, suppose you have appointed the transaction auditor, or if you appoint the valuer, they are going to raise the invoice on the corporate data, right? So they have to raise the tax invoice on it. You can continue with the old GST number only in the case where all the previous month return prior to CRP period has been filed. Then only you can continue with the old GST number. Otherwise, you have to take a new GST number.
Now here is a question. Say, as you just said, there is a forensic auditor, there are other consultants also who are raising the tax invoices. But those invoices are mostly paid at the end of the, after CIRP expenses are approved, which is mostly beyond, 180 days period. So in that case, is the input tax credit will be available?
So you are talking about 180 days, where under GST law you say that if you have not make the payment within 180 days, then you are liable to reverse the credit, right? You are pointing out towards that law.
Yes.
Yes. So the payment has to be made, has to be approved by the COC, if I'm not mistaken, under the CRP process, which is done under the operation of the law, right? In such a scenario, I don't think that the payments there would be an issue in claiming the credit of it. However, the GST department can raise the question on it. There is no such clarity on it as of now. So ideally, I would suggest that you claim the credit of it.
But mostly there is no fund
Action is not taken in 30 days, sir.
Sorry, sir?
What if the registration is not taken in 30 days?
If the registration, you are contravening the provision of the act only, sir.
No, but will it be possible to take it delayed?
Absolutely, absolutely. It will be possible.
Okay.
Unnecessary, we have to file the returns, nil returns.
Absolutely, you have to do all the compliances that needs to be done. So shall I move with the next topic that is more relevant as of now? Sale of assets during liquidation. So the liquidators are being appointed under section 34 of the IBC, and under section 36(1) of the IBC, the liquidator shall form a state of the assets known as liquidation state. Liquidation state is basically the assets of the corporate debtor. Now, the liquidation holds the asset as a fiduciary, that is as a trustee for the benefit of all the creditors. That means the liquidator is not the owner of the assets. They're only acting as a fiduciary, as a trustee for the benefit of all the creditors. Now, once the company goes into the liquidation, they start selling of the properties if the business cannot be continued. In such a case, Regulation 32 has been introduced, which envisage different ways of selling the assets. So there are right now 6 clauses under which you can sell the assets. Number A, an asset on a standalone basis, the asset in a slump sale, a set of assets collectively, the asset in parcels, the corporate data as a going concern, and the business of the corporate data as a going concern. So all these 6 ways needs to be discussed, and two relevant questions that needs to be answered here. First of all, whether there should be a levy of GST on it. Second of all, if the GST has to be levied, what rate it has to be levied. Third, a clarity is required with regard to the slum sale. Fourth, a clarity is required with regard to the going concern. So now, sir, I'm going to deal with clause A, C, and D. That is asset on a standalone basis, a set of assets collectively, and the assets in parcels. So what practically I have seen that liquidator issue the EOI if the corporate data is consist of different class of assets. For example, the corporate consists of the land, factory land, they have a factory building, then they have a plant and machinery which has long list with more than 100 line items. So normally what they do in the EOI is they create a different blocks. So they say that if, for example, block A is consists of all the plant and machinery, that 100 line items, the land of the and the building, and they assign a single value to it, for example, 100 CR. In the second block, they say that, okay, I will put up all the plant and machinery under a single block and assign a single value for all the 100 machinery, that is 30 CR. Now they have created another block for which they have of land and building and assign a single value of 70 CR. That means as a bidder, I can go for block A also, I can go for block B also, and I can go for block C also. So question arises here is whether GST shall be levied on it. If yes, what shall be the rate of it? So taxable event has been defined under section 5, which says supply, and supply has been defined under section 7 of the GST Act. What section 7 subsection 1 clause A says? It says all form of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course of furtherance of the business. So if I am selling the assets as a liquidator, I'm selling the assets to the organization. It will fall under the purview of subsection 1 clause A, that is sale. Now what section 7 subsection 1A says? It says that where certain activities or transaction constitute a supply in accordance with the provision of subsection 1, they shall treat it either as a supply of goods or supply of services as referred to in schedule 2. So schedule 2 contains the list of activities which shall be treated as supply of goods or supply of services. However, in order to levy GST on it, it has to satisfy section 7 subsection 1. So it is clear that whenever the liquidator is selling the asset, it will fall under section 7 subsection 1. Now what schedule 2 serial number 4 says transfer of business assets, where goods forming part of an asset of a business are transferred or disposed of and no longer to form part of those assets, it will consider supply of goods. सर कॉर्पोरेट डेटा का बैलेंस शीट में देखो, बैलेंस शीट में बिजनेस एसेट्स मेरे हैं आज के दिन में, प्लांट एंड मशीनरी मेरे है, लैंड मेरे है, बिल्डिंग. लिक्विडेटर सेल कर रहा है तो वो सप्लाई के परव्यू में फॉल कर रहा है. सप्लाई के परव्यू में फॉल कर रहा है तो इट विल कंसीडर एज अ सप्लाई ऑफ गुड्स एंड जीएसटी शैल बी लेविड ऑन इट. However, there is a point that can be pondered upon. Liquidator is not holding the title of the goods. Corporate data is actually holding a title of the goods, because by operation of the law, the assets of the corporate data have been transferred to the liquidation state, which have been sold by the liquidator. So whether GST shall be levied, because liquidator is not a seller here. So this point needs to be pondered and has to be tested before the court of law in order to say that GST shall not be levied on it. However, without entering into the litigation, let us understand what is the intention of the law, what is the intention of the authority. What they say is whether the sale of assets through liquidation process will attract GST or not. So same question has been raised in before the West Bengal Advanced Ruling Authority in the matter of Mansi Oils and Grains Private Limited, which held that sale of assets of corporate debtor by liquidator would amount to supply of goods and liable to discharge GST on it. So West Bengal Advanced Link Authority has says that कि हाँ अगर liquidation के दौरान corporate data कोई asset sale होता है, it will liable to GST on it. However, whenever you will read this whole case law, they have not discussed the section 7 that is supply. They have not discussed schedule 2 properly. They have just quoted it. The whole discussion has pondered upon whether on registration and the liability. And for registration, they have referred the notification number 11/2020, which I have discussed in the beginning. I still, you have to note down that notification 11/2020 is only for the CRP process and not applicable on the liquidation process. So somehow the merit of this case can be challenged. But liquidation process, nothing new. It's not new right now. Prior to IBC, there was finding of orders happening, and there was a sale of asset during the liquidations. So Honorable Supreme Court in case of Hindustan Urban Infrastructure Limited, in the context of the Kerala sales tax, held that sale of assets by the liquidator will levy to sales tax. They have held, what are the observations they have made? They have made in a para 61, they held that the company in liquidation is a dealer with regard to the sale of its assets by way of an auction under winding up order. So they have told that the company in liquidation will be considered as a dealer. The settled law that an official liquidator steps into the shoes of the director of the company in liquidation and perform his statutory functions in accordance with the directives of the corporate code. So they say that a liquidator will step in the shoes of the director of the company and will perform as per the directive that has been issued by the NCLT. So it has been concluded that the liability to pay sales tax in the present case would be on the official liquidator in the same manner as the dealer, that is the company liquidation. So in the earlier law also, during the sales tax regime, they have told that if you are selling any asset during the liquidation, sales tax has to be levied. In the same line, the Advanced Link Mansi has also told that if you're selling the asset under liquidation, then GST has to be levied on it. Now the question arises here. Okay, we all agree that the GST shall be levied on it. Now question arises, at what rate of tax the GST has to be levied? In order to understand the rate of tax, one needs to understand what is mixed supply, which has been defined in section 2, subsection 74 of the CGST Act. It says that mixed supply means two or more individual supplies of goods or services or any combination thereof made in conjunction with each other by a taxable person for a single price where such supply does not constitute a composite supply. So there are 3 points that needs to be satisfied in order to fall under the purview of mixed supply. The first point is there should be at least two individual supplies. Two individual supplies, that means there can be two machinery, or there can be one machinery, one building. There should be two products, basically, two or more products. The second point is the whole supply, that is two products, has to be sold under a single price and not under two different individual values, on a single price that has been sold. And the third point is it should not be composite supply. Composite supplies basically means there are 2 or 3 supplies where one supply is a principal supply and other 2 is the ancillary supply. However, in case of mixed supplies, all the product that have been sold are equally important. So if you are selling plant and machinery and land and building, all the 3 are really equally important. So it will fall under purview of mixed supply provided you have assigned a single value. Now, what shall be the GST rate? Section 8 of the CGST Act envisages that tax liability in case of mixed supply. A mixed supply comprising of 2 or more supplies shall be treated as a supply of that particular supply which attracts the highest rate of tax. So coming back to our example, now suppose in block A, there is plant and machinery, there is land, and there is building. All the 3 products are equally important. And for all the 3 products, there is a single value that has been assigned is 100 CR. So it will fall under purview of mixed supply. Now, if the GST rates are 5%, 12%, 18%, 28%, if any of these products, now suppose in plant and machinery, there are 100 products. Out of 100 products, 90 products attract GST at a rate of 18%, and 10 products falls under the purview of 28%. In such a case, the whole block will attract the highest GST rate, that is 28%, because one of the product in the block attracts GST at the rate of 28%. So the whole 100 CR will, on whole 100 CR GST at the rate of 28% shall be levied. Now you can raise the question that with land being an immovable property or building being an immovable property, whether GST shall be levied on it. As per Schedule 3 of the CGST Act, sale of land or sale of building is outside the purview of GST. But in here, you have not assigned a separate value for the land or separate value for the building. So department will contain that since all this forms a single block and you're selling at a single price of 100 CR, there's no separate value has been assigned for the land and building. In such a scenario, GST shall be attracted at the highest rate, that is 28%. Similarly, in block B, sir, plant and machinery, if there are 100 plant and machinery, 99% of the plant, 99 line items of plant and machinery attracts GST at the rate of 18%. Even one single machinery attracts GST at a rate of 28%, then on whole 30 crores, GST shall be levied at the rate of 28%, which will be burden for the buyer because it will take time to consume that ITC. For land and building, we all know that if you are making a separate block of land and building and since it's outside the purview of GST, on 70 CR, there won't be any GST implication on it. So any question in this regard up to here?
Harsh, will the buyer in such a case be eligible to entitled to claim ITC?
Yes,
on
of
the
course.
GST that they pay?
100%, no doubt about it.
Even on the land part also?
If the GST will be attracted, then he can claim the credit of it, no doubt about it.
No doubt, no, that's great. Because that's a button.
But you can do the tax planning here. You can save a lot of GST amount here. The tax planning is possible in this particular area.
Agreed. But then that's a regular question we get from all the prospective auction purchasers.
I have already received more than I think 10 or 15 queries with regard to this particular matter only. Give me the opinion whether the GST shall be levied on it, if possible, what shall be the rate, and what tax planning is possible on it.
That's a regular question. Yes, absolutely. Thank you.
Thank you. Now, the most important part of it, which we all need to understand. We have covered that if you're selling the asset on a parcel of collectively on a block basis. Now, question arises here, if the liquidator is selling the asset on a slump sale basis or liquidator is selling the assets as a going concern basis, whether GST shall be attracted on it. So you have to understand the differentiation between slump sale and the going concern. Under GST law 12/2017 lists on the activities which are exempted from GST. One of the services is services by way of transfer of going concern as a whole or independent part thereof. That means if I am selling the corporate data as a going concern, it will be exempted from GST. Now question arises here is whether slump sale will also exempted from GST. Answer is no. What is slump sale? So for example, if a corporate data is having two factories, one in West Bengal and one is in Maharashtra. The Maharashtra factory has been shut down. Maharashtra factory consists of plant and machinery, land and building. He can assign a single value of the whole factory and sell that factory to the buyer. In such a case, it will fall under the purview of slump sale, but it may not be a going concern. So one need to understand that slump sale may not be a going concern. There is a view that has been prevailing in the industry that slump sale is a going concern, so there will be no GST implication of it. Answer is wrong. No. Slump sale has not been defined in the GST law, but in common parlance, it's a concept involving sale of one or more undertaking for a lump sum consideration without assigning any individual value to the asset and liabilities. Now, the next important point is what is going concern? Now, sir, going concern has not been defined under GST law, but there has been certain case laws where going concern concept has been explained, or where the ruling has been sought whether if I am selling the business as a going, I'm selling the business, whether it will fall under purview of going concern and whether I can claim the exemption on it. So under GST, there is one particular judgment, SCV Sky Vision, where the where in this case the SEC was involved in cable network operation business. So he has entered into the business transfer agreement with the buyer where they says that he will transfer, the SEC will transfer all his movable and immovable properties, employees, goodwill, unexecuted orders. However, he will not transfer his past and existing liabilities. So they were contending that it will fall under a going concern. However, the ruling came out and held that if you are excluding the past and existing liability, it will not be considered a going concern and GST shall be levied on it. So as per the this ruling, transfer of liability is equally important in order to fall under the purview of going concern. There is another Delhi High Court judgment in case of Indorama Textiles Limited, where the Delhi High Court has said that in this case that it held that a company is said to be transferred as a going concern when the assets and liabilities being transferred constitute a business activity capable of being run independently for a foreseeable futures. So here there are three important points that have came out. The assets should be transferred, the liability should be transferred, the business activity should be capable of running independently, and there should be foreseeable futures. If all these four limbs are being satisfied, then only it's going to fall under the purview of going concern, otherwise it will not. So, but you have to make a, you need to notate here that all this judgment, what I have quoted right now, is regard to a business which is not under the CRP or which is not under the liquidation. They are running as a normal business. So my question is whether if I'm running a normal business and if I am my business under the liquidation, whether they are same, because as per me, they are completely two different genre. It cannot be compared because the scenario is completely different. So in my view, transfer of liabilities would be difficult during the liquidation process. So let us understand what IBC says. On 27 April 2019, a discussion paper has been issued by the IBC, which has explained the ambit of regulation 32E. 32 is basically sale of corporate debtor as a going concern. It has been mentioned in the regulation that in this form of going concern sale, the corporate debtor will not be dissolved. It will form part of liquidation state. It will be transferred along with the business assets and liabilities, including all contract, license, concession, agreements, benefits, privileges, right or interest we acquire. So in the discussion paper, they have also they have mentioned assets and liabilities should be transferred. Then discussion paper again further examine whether there is a requirement to give a definition of a going concern sale. So if you look at the underlying part, it has been mentioned that the phrase as a going concern implies that corporate data would be functional as it would have been prior to initiation of the CRP, other than the restriction put by the code. That is the intention of the IBC has made the intention very clear that if during the liquidation the corporate data has been sold, if they are going to function in the same way when they are functioning prior to CRP period, then it will be considered as a going concern. Same point has been pointed out by Vinod sir in the first part of it, first seminar. So they have mentioned there is no requirement to define a going concern under IBC. However, they have again moved forward and says that, however, it may be explained that going concern means all such assets and liability which constitute an integral business or the corporate debtor that must be transferred together, and the consideration must be for a business or the CD. So in one part, they are explaining that if the corporate debtor is going to function the same thing that is prior to CRP period, then it's the going concern. In another part, they are explaining that there should be a transfer of all the assets and there should be a transfer of all the liabilities at the same time. Then it's going to fall under purview of going concern. So there was one relevant judgment under IBC of Gupta Global Resources Private Limited, where the Mumbai bench of NCLT has made the following observation. Learned counseling appearing on behalf of the liquidator submitted that the meaning of going concern is not at all clear in the liquidation regulation. Different meaning have emerged in the context of accounting standard, GST law, and from several rulings. Going concern means all the assets, tangible, intangible, and resources need to continue to operate independently a business activity, which may be whole or part of the business of the corporate without value being assigned to individual asset or resources. It is pertinent to mention that when the business of the corporate data is being sold on going concern basis, then it has the presumption that the sale will be with assets and liabilities. So they have mentioned in the judgment that there is a presumption that there will be a sale of assets and liabilities. Now, this part of this judgment has been filed further for the review application. Review application has been filed for this particular observation, whereby the petitioner has put forward two important contention. The first contention, what petitioner has put forward is that going concern sale, including even liabilities, was either an obitera dicta or refers to sales on going concern basis outside of liquidation and does not refer to going concern sale in terms of regulation 32 of the IBBI. Petitioner has urged or has contended that the going concern definition, what has been put forward in the NCLT judgment, is not for the business. It's not for the business which is under liquidation. It is for the business which are under the normal scenario. So it should not be applied here in the liquidation. And the second contention he has put forward is, if the liabilities are required to be transferred to the buyer of the corporate debtor, then the claimant is having two claims. Why two claims? They have it has been mentioned in the petition that whatever I sold in the liquidation state will go to the claimants, and against when the corporate debtor will transfer to the buyer, again the claimant is going to claim from the buyer because the liabilities have been transferred to the buyers. So it will lead to the impossibility scenario. However, the Mumbai bench has refused to interfere with the order, noting that it does not have the power to review its own order, especially when the order was passed on merit. So even if we refer to the accounting standard, Indian accounting standard, you will find that the going concern has been defined as transfer of assets as well as transfer of liabilities. So if we combine all the judgment and brings all the relevant limbs that needs to be satisfied in order to fall under purview of going concern, 5 important points are coming forward. First, all such assets and liabilities which constitute an integral business or the corporate debtor that must be transferred, asset or liability must be transferred. The second point is there should be a consideration. The third is the buyer of the asset or liability should be able to run business without any disruption. The fourth is the business of the corporate debtor must be running. It must be transferred along with the employee. There must be transfer of unexecuted order. So all these points needs to be present in order to fall under the purview of going concern. However, as my view, when you are running the business in the normal scenario and when you are running the business in the liquidation scenario, these two are completely different genre. So in the liquidation proceeding, transfer of liability is very difficult to satisfy. In such a scenario, even if the department is still persisting that whenever there is a transfer of liability, then it's going to be for the purview of going concern, there would not be any exemption then under GST. So these points will face a lot of litigation in the near future. So with this, there is any doubt about this particular point?
I have a question here. It means in case of transfer as a going concern, are we envisaging the transfer of the legal entity also, or is the transfer of only assets, liability, and the employees?
Under regulation 32, there are 2 points, clause E and F. Clause E says that transfer of corporate debtor as a going concern, and clause F says transfer of business of the corporate debtor as a going concern. Transfer of corporate debtor as a going concern means you are transferring the whole corporate debtor to the acquirer. In such a scenario, the existing shareholder will be vanished and the new shareholders will be coming. This particular clause, sale of corporate as a going concern, has been explained in the discussion paper. I just pointed out right now here. You can see the consideration received from sale will be split into the share capital and liabilities based on the capital structure that the acquirer decides. there will be an issuance of shares by the corporate debtor being sold to the extent of the share capital. The existing shares of the corporate debtor will not be transferred and shall be extinguished. That means only the management is going to change. The corporate debtor is going to continue. However, the top management is going to change via transfer of shares. Now, transfer of business as a corporate transfer of business of the corporate debtor as a going concern means, suppose that I am a corporate debtor, I am running two businesses, insurance and the manufacturing. My manufacturing business is a going concern where still the production is happening. There is an employee, there is an orders which are still continue. So this business I can sell as a going concern. But insurance business has not been working from last 2 years. It has been completely stopped. In such a sale, if you are selling this insurance business as a single value, it will fall under purview of slump sale and the GST will be attracted on it. So am I clear?
Yeah, you're very much clear. I have another question also. Say in case there is a claim by the GST department to a liquidator, and post selling the liquidation state, the claims are to be settled and they will be paid under the operational creditor government liabilities. So are we supposed to pay it by way of challan, or we can just transfer or take a no due certificate, or what should we?
You're talking about the claim prior to CRP period, or you're talking about the claim that has been done during the liquidation proceeding?
In both the cases, when in CIRP period.
Prior to CRP period, we're talking about prior to CRP period, right? First.
Yeah, prior to CIRP period, whatever claim they have.
CRP period, all the government dues falls under the purview of the operational creditor only. So there is a classic judgment of the High Court in case of GCS Infrastructure Limited. What happened basically that the CRP process has been initiated and the total demand under service tax was amounting to ₹7 crores. When the CRP process has been initiated, Service Tax Department has issued a notice to the third party and has recovered around 6.5 crores. In the resolution plan that has been approved by the adjudicating authority of COC, they have mentioned in the plan that only 5% of the principal amount of the total liability shall be given to the operational creditor, including the government dues. But the government has already recovered during the CRP process to the third party. The matter went to the High Court, and the High Court has had pronounced that it is against the order of the NCLT, and the Service Tax Department is only going to get 5% of the principal amount, as 5% of 7.5 CR and not 6.5 CR. So whatever extra amount that has been recovered by the Service Tax Department to a third party is good. They have to give back to the RP. And there is another judgment of the Rajasthan High Court in case of Binani Cements, where the Binani Cements has been taken over by the Ultratech. The same issue has been happened, and the judgment was in favor of the RP only.
My question, this is very much clear now, and my question is how the payment should be made, whether it should be made through challan or it should be direct by way of bank transfer to them.
So it will be distributed as per the regulation, the CRP, or as per the regulation that is 53 of the liquidation proceeding.
Will it be paid through DRC3? That's what I'm trying to ask.
No, sir, I don't think so. You don't have to pay to DRC03 because it's no more functional. You don't have to.
In case of CIRP, we have taken a new GST number. So whatever claim is there, will that be paid through DRC03?
If there is any default during the CRP period of tax amount, the liability is on the IRP and RP. So if there is any default, the RP and IRP is going to pay to DRC03 if the registration exists.
That is during the CIRP period. So any claim prior to CIRP period should be paid directly to their account, not through DRC03.
Right. Provided the resolution plan has make a provision for the operational creditor, including government dues.
Yeah, agree with you.
So any other question in this regard, sir?
Do we need to take any no claim certificate? That is not required.
Not required. So with this, sir, I'm concluding my presentation. I hope it is clear to everyone.
This was very nice presentation and very educative also, and a lot of practical aspect you have covered. Thanks to you for enlightening our knowledge on these critical topics. There are a lot of questions which keep on coming. You look forward for much more sessions with you on this.
Thank you, sir. Thank you so much.
Thank you, Harsh, for enlightening us with your presentation and with your deliberations. GST as it is a very complex and a confusing thing for everybody. Coupled with GST, IBC again itself is a very complex and a confusing thing for many.
Both are introduced at the same time.
Both introduced at the same time, and when both of these combine, I think it's a super complex kind of situation which all of us have to deal with.
Very much shows a lot of litigation is going to come.
Absolutely, but if we have an advisor like Harsh, I'm sure that we are in safe hands. So thank you, Harsh, for giving us your time. And I'll present a e-memento to you from the ACA on behalf of the ACA, and I'll request everybody to kindly join me through a round of applause for Harsh.
Thank you.
I'll share my screen and I'll present the e-memento. Just a second. There's some problem. Very well. So that's the e-memento which is shared with Harsh, and thank you again. And to all the participants, we conclude this session for today. And the part 2 of this conclave will start at 3 p.m. tomorrow. So kindly join again.
Sir, would you be sharing the PPT, sir?
Yes, we'll do that. We'll collect it from the speakers and share it with all of you in due course.
We have given our email IDs in the chat box, sir.
Yes, we have it through the registration as well.
Okay.
So we'll share it. We'll share all the 6 presentations with you in due course.
So nice, sir. Thank you, sir. Highly obliged. It was a very wonderful course, sir.
Absolutely. Thank you so much.
Thank you.
Please join tomorrow again at 3 p.m. The links would go to you from Zoom.
Thank you, everyone. Thank you.
Thank you very much, and good night.
Good night.